investment in the U.S.
Right.
And a big part of the reason why is because of the president's tariffs policies give them a strong incentive to want to move some manufacturing here, because they know that if they don't do that, they're going to be hit with a tariff.
With 45 seconds, David, I've got to ask you, therefore, should Intel not be getting the money? Is that the company you're hinting at?
I'm not saying they shouldn't get it, but I think that everyone knows that Intel is a very challenged company right now. And I think that it's unfortunate. We want Intel to do well. We want domestic chip manufacturing, and Intel is a legendary company, and it is one of the few companies in the United States that's capable of doing advanced chip manufacturing. So we want them to do well, and I think we will try to do whatever we can to help them do well.
Well, you're going to be speaking with lots of leaders from other companies today, of course, over at the White House, leaders of crypto exchanges across the board. We thank you so much.
That was Bloomberg Television speaking with David Sachs, White House AI and crypto czar, and partner Craft Ventures, talking about the crypto world. There's a crypto conference going, or summit going on at the White House right now. And again, President Trump says he is very pro crypto. Getting back to the markets here, we've got red on the screen. S&P off 0.6%, the Nasdaq off 0.7%. The labor number came in today. It's a little bit softer than expected. The labor market is softening, according to some reporting by Bloomberg. More people permanently out of work, fewer workers on federal government payrolls, and a jump in those working part-time for economic reasons. So the headline number was just a little bit weaker than expected, but peeling the onion, a little bit of concern there about the state of this labor market. Danielle DiMartino Booth joins us, CEO and Chief Strategist at QI Research. Danielle, I'd love to get your thoughts on kind of this labor data point we got today and how that may influence Fed behavior going forward.
First of all, thank you for having me this morning. It'll be interesting to see what Federal Reserve Chair Jay Powell has to say today at 12:30 Eastern, specifically with regards to the underemployment rate. To see a half a percentage point rise from 7.5% to 8% in that number was really a bit alarming. My Bloomberg chat room this morning, that's really all we've been talking about is there enough income in the U.S. economy right now to sustain spending? And that's a big question going forward, especially after we saw yesterday morning's Challenger Grain Christmas layoff numbers breach 172,000, the most since 2009.
So do you feel like this is an uncertainty period, or as Scott Besson said earlier today, a detox period, or how would you describe it?
Well, so people are using a lot of good synonyms, so to speak, and it certainly does feel like this is going to be a period of transition for the U.S. economy. Bloomberg does a great job of tracking bankruptcies, BCY Go, and we've been seeing more multi-billion-dollar bankruptcies coming across the terminal in the last few days, and as well as store closings, and not just one and two, but entire chains. So there are a lot of people being affected right now in the U.S. economy, in addition to the public sector layoffs. So I think detox is a very kind political way of saying what's to come.
How deep, to the extent the economy does soften, how deep do you think it might go, and over what time frame?
Well, so I think that what we're seeing here in the U.S. economy right now is akin to a heart attack. I don't mean to use hyperbole or be sensationalist, but I do think that right now the private sector layoffs are going to feed off of the public sector layoffs that we're seeing and create what economists term an adverse feedback loop, where the private sector is going to be preemptive in trying to get in front of income is falling and continue to do more layoffs, as we just saw last evening with Hewlett-Packard Enterprises.
So from this perspective, if it's confusion for everyone else, it must be very big question mark for the Fed also. If they use something like transitory weakness or transitory inflation, that word is verboten, but in essence, isn't that kind of what they need to wait and see?
They do, because if you look back at the 2019 transcripts, what happened to the U.S. economy was that the drag from tariffs slowed growth more than it raised inflation. And so that put the Fed on its back foot, having to focus more on its other mandate of employment versus inflation.
Danielle, thank you so much for joining us. Always appreciate getting a few minutes of your time. Danielle DiMartino Booth, she's the CEO and she's the Chief Strategist at QI Research. Right now, let's get a reset of this market. We go to John Tucker for a Bloomberg Business Flash, John.
All right, the major averages, they are all lower right now. This Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, the NASDAQ 100, that does remain in correction territory. It is down 10% from its February record high. The NASDAQ 100, 160 points lower, down about 0.8% right now on the day. The S&P 500, 40 points lower, and that is down 0.7%. The Dow Jones Industrial Average is down 233 points. You have Microsoft, Amazon, Meta Platforms, all the laggards right now, the S&P 500, each of those down at least 2%. And the unemployment report, the jobs report today showing some mixed results. Non-farm payrolls increasing 151,000 in February. The unemployment rate rising to 4.1%, leading to uncertainty and volatility in markets. Even the VIX is volatile. It's been up and down right now, above 25, Wall Street's fear gauge. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com.
Bam.
Bam.
That's
There you
lame.
go. I have to start with this one, being the proud New Jerseyan that I am. Danielle Moran joins us, municipal finance reporter for Bloomberg News. She joins us here in our studio. New Jersey College to merge with state school to avoid closure. What's going on there?
I am also
Is
proud.
Princeton merging with Rutgers?
No, that would be exciting though.
That'd be something.
We'd have that in
That'd
the
be
headline.
really good for Princeton.
I too am a proud New Jerseyan, so I was also excited about this story. But yeah, this week the Board of Trustees for New Jersey City University, which is like right across the river in Jersey City, approved the pursuit of a merger with Kane, which is based in Union.
First, Kane or Keen? Where are we now?
I say Kane. Is that
No,
correct?
it's just the family has had pronouncements on this in the past. It's gone back and forth.
Okay.
I think you're right. It's Kane. It could be
Okay.
Keen, but it could be Kane.
Now,
it's a Jersey
the
thing.
town of Keansburg was named for the Kane family because the Senator Kane, the old guy,
Yep.
he got them their first post office. And I say Keansburg, and I know Tom Keane, and I call him Tom Keane.
But there was a
former
movement, and we're getting way off script here. But anyway, we'll go with it. So all right,
Whatever.
they're merging.
Yes, they're poised to merge.
Okay,
So this
okay.
will kickstart a process. I think there's going to be a letter of intent signed before the end of March, and this will just start a review essentially. But we've seen this prop up amongst like smaller colleges around the country, these mergers, because the economics of higher education are really tough right now. There's a declining number of prospective students. The birth rate fell off in 2007, 2008, and now those kids are starting to go to college, which is causing some problems for some schools. But what's interesting about this situation is that New Jersey City University is a public school. It's not private, and we've seen a lot of the issues in the private space. But that just shows that some of the economics that are happening across the sector sort of transcend the public-private debate. And this is a way for them to improve their financial situation. And it gives Kane a campus in Jersey City, which is close to New York. And they're excited about that possibility as well.
It really feels like we're going to see like a wave of college closures, aren't we? Like in a big, big way, like across the board, like those smaller, independent, insanely expensive schools.
Yeah, there was a really interesting paper out of the Federal Reserve Bank of Philadelphia earlier this year that talked about this wave of college closures that's expected. And I mean, the economics are just getting more difficult, and schools are finding different ways to stay afloat. Merging is one of them. Selling off assets is another. Finding a niche, like whether they're focused on the arts or STEM, is another thing that we're seeing coming across the space.
It's always been a haves and have-nots based upon your endowment or lack thereof, and I think it's just becoming even more and more and more pronounced. You see these big universities have multi-billion-dollar capital raises for their endowment. At the same time, we're seeing these smaller schools, liberal arts schools, so it's just kind of getting, I think, a little bit more disparate. New York City finances are sinking with key gauge default to 11-year low. What's going on with New York City? I'm paying my taxes.
Yeah, New York City's Independent Budget Office follows this sort of technical but really key metric called the operating surplus as a percentage of tax revenue. So they look at this number, and it is projected to fall to 4.8% at the end of this fiscal year, which is the lowest percentage since 2014. So no one is saying that New York is on some dire financial footing, because it's not. Tax revenue is coming in strong. Wall Street's performing really well, which is good for the city. But it is an indicator that there's just higher expenses and some overspending that needs to be taken care of. So we're seeing a similar trend actually happening in LA as well. My colleague Max Adler had a story out about LA revenue this week that said that they're estimating revenue to come in about $140 million lower than projected, which is accelerating a budget deficit. So we're starting to see these little pockets of stress happening in cities, and all of this is coming as a backdrop of these cities are expecting less financial aid from the federal government under a new administration. So they're preparing for that and starting to make some tough choices.
Okay, so this is like a preventative may not be the best word, but preemptive maybe versus actual, this is the economy today, this is why we're making the decisions?
It's projections. It's something that they're expecting going forward, and starting to, as budget negotiations kick off, most cities and states have a July 1st fiscal year. They're trying to get ahead of it.
Well, what ends up happening, if I can jump in?
It's Munis. You jump in anytime you want.
I jump in with Munis.
Yes.
I haven't talked to Munis about like a couple weeks at this point. What happens if the congestion price goes away here in New York? Like, are you guys talking about that at all?
Definitely. That's a really big issue for the MTA. Everyone who rides the subways, the buses in New York City is familiar with the MTA and knows that it has a very long list of capital improvements. So congestion pricing was aimed to raise money to fix infrastructure and to reduce traffic, but the money that raised is going towards infrastructure development. If that money goes away, if the program is halted, there's going to be a gap, about $15 billion in the MTA's infrastructure budget, that they're going to have to figure out a way to fill. That could come from the state. It could come from other revenue-raising measures, but it's a very big chunk of money, and projects depend on that. The 2nd Avenue subway up here, extending to Harlem, is a project that is dependent on congestion pricing revenue. So they either need to find the money or they need to scale back the projects.
Interesting. All right, Danielle, thank you so much for joining us. Danielle Moran, municipal finance reporter for Bloomberg News, joining us live here in our interactive broker studio. Also in studio on Fridays. Boy, this is we're seeing more and more people in on Fridays, I guess is what I'm trying to say.
What?
You
are seeding this? This is huge for Paul, by the way.
I think it's happening.
Okay,
I don't know.
okay.
Catherine Doherty joins us, finance reporter, Bloomberg News, joins us again here in studio. In a story that, quite frankly, concerns me, NASDAQ joins exchanges seeking to offer round-the-clock trading. Tell us about this.
Paul, I don't know if you need to be concerned right away.
Okay.
They made this announcement about their intention to extend their trading hours. So
like I intend to go on vacation at some point.
Exactly. Okay. But let's take a step back to say that these plans are far out. So NASDAQ gave some indication that they don't expect this to actually start happening until the second half of 2026. So this is not even a 2025 story, but specifically for the exchanges. And the reason being, the numbers that we're seeing right now, anything that is trading actively on any of the public exchanges, that data is all going to one feed, and that feed cannot accommodate overnight trading right now. So in order for this to actually move forward in a meaningful way, and for NASDAQ, NYSE, SIBO, any of the exchanges to offer overnight trading, that data feed needs to be updated, and they need to work together to make sure that it can all.
All right, this is the way it works. When I was on the trading desk, you get in at 7. That's the bed. It was a little early, particularly if you're out late the night before with clients. Trading starts at 9:30. Bell goes off at 4 o'clock. 4:15, you're at Farrell's across the street.
Sure.
Having a couple of cocktails. That's the way it's supposed to be.
Right.
None of this like stay late and trade late kind of thing.
Right. So, okay, great point. So why do they want to even do this?
So they are saying that the demand for U.S. stocks that they see, particularly abroad, is enough to start offering this to their clients. But when you talk about the actual demand and who it is that's actually behind these trades, a lot of it is coming from retail investors. It's not the big institutional block trades that are coming through at 4 in the morning, particularly for the instance that you're describing, Paul, of showing up, you're at your desk, those parameters are likely to stay in place, but you want to have some flexibility if you have an office that's in Asia. I think what's going to happen is that the staffing is what's going to change. So you might not have the trader in New York that has to stay much past 4 o'clock like they normally do, but you might have to hire another trader in Asia. Maybe you're hiring a team in Europe to accommodate for the earlier hours in the US. There's ways to do this that doesn't mean those of us in the US and particularly in New York are going to have to stay late or wake up earlier.
Wow. Okay, that's fine. But the funds, they don't do this trading though, right? It's like big funds like the CTAs, the vol-controlled funds, like they wouldn't trade overnight.
Right now, they can't, but
would they? If because usually they just trade in the cash market.
That is the big question. So once
that would be something.
Once NASDAQ and NYSE and all them start to offer this, the question is who's going to take the advantage per se? Who's going to actually be the ones that are trading overnight?
And who does it first? Because when one person starts, and they all have to go, right?
Right. And really, what is there's a lot of speculation that the retail trades that are being made, there's not enough liquidity, so therefore the experience, the price that they're actually getting, the execution quality suffers because of that. But if there's more trading that happens, that could start to improve the quality, and thus there might be even more trading that starts to happen because of that.
Would this mean like no closing bell at 4 o'clock?
That's something that the industry needs to decide on.
Right.
Because
that
think
would
about
be
it.
Ding, 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 ding,
Think
ding.
about it. If there's
No
no
dinging?
opening or closing bell, you need to actually decide at what point are we into the next trading
How
day.
does Bitcoin do it? I'm just
Tiny
asking
brain
rhetorically.
blown.
I don't know. I don't know how Bitcoin does
It's a different market structure, but it's funny. I saw a lot of posts on X today from the crypto community saying, "Oh, nice of you to join us, equity exchanges. We've been doing this, and come along. The water is warm."
I don't know.
That's
All right, we'll
pretty
see.
amazing.
We'll see. It's progress. You can't stand in the way of progress, Alex. You need to
Says the guy who doesn't
Yes.
have to do it anymore.
Says
In the
the
same
guy.
way. All right. Thanks so much, Catherine. Really appreciate Catherine Doherty, Bloomberg finance reporter, joining us. The NASDAQ joining an offer to go around the clock. That's a great point. Like, when does the next day then officially start?
Right.
Does it go Asia? Like, is that the moment?
I don't know. All I know is I come in, I go home at Bitcoin's at, like right now, 87,500. I'll come in tomorrow at, 5:45 and it's 82,000. Like, what happened, overnight? But
These are all good questions. All right, much more coming up here on Bloomberg. We're going to talk about the markets and what do you do when we're down another 1% on the NASDAQ. We are now in correction territory for NASDAQ 100. For the overall NASDAQ, we're getting there also for the S&P. Olalu Aganga will be joining us, U.S. Chief Investment Officer over at Mercer. Taking a look at the bond market, kind of how do we price in this jobs data for today? It seems like buying across the curve, that front end, down by 4 basis points, 391. We got that 3 handle on that 2-year yield. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let me start off with most actively traded stock, and that would be NVIDIA. Those shares of NVIDIA down 1.6%. What does that mean? It has shed $1 trillion in market value.
Never seen that.
So put that in your pipe and smoke it. Stocks overall, it's kind of getting ugly. Yet another Friday sell-off. S&P 500 hitting session lows. I'll do my math here, Paul. For the S&P 500 from the peak, it is now down 7.5%, 7.57% to be exact. The Magnificent Seven tumbling 1%. NASDAQ 100, that is in a correction territory right now, down just over 10% from its high. Stocks on pace for a 6th lower close on a Friday in 7 since Donald Trump took office. These are facts. Consumer staples lower after Costco missed profit estimates. Declines also happening after Walmart and Target. Those results this week, too. And we care about those consumer stocks because what's the #1 growth engine of the U.S. economy? The U.S. consumer. Still, Mandy Wan at Wells Fargo thinks, you know what, the overall economic backdrop does remain positive in the U.S.
Recession is not the base case for us. You know, there's still a lot of room between like a 2% growth into like heading into recessions. If you look at like, you know, where we are now in the U.S. market, I think job market is still very solid.
Well, today's data did show the jobs market that is slowing. Right now, the S&P 500, 63 points lower. This is a decline of 1.1%. So we're at 5674 in the index. The Dow Jones Industrial Average, 370 points lower. That is down 0.9%. The NASDAQ 100, 1.4% lower, down 277 points. And right now, let's do yields. The 2-year, which is more policy reactive right now, that is 5 basis points lower. I'm going to call this a haven bid. So it's right now at 390 for the 2-year. The 10-year, money's going into that as well to seek some safety. It is 4 basis points lower, 423 there. What else? Let's do crude oil real quick. NYMEX crude, that is actually higher today, up 1.25%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Allison Paul.
Yeah, Johnny, think about the 2 or 3 or 4 weeks after the election, there was at least I sensed a palpable sense of optimism out there, not just in the markets, but out there in the world. And you're thinking, I'm going to get a pro-growth administration. I'm going to get lower taxes. I'm going to get less regulation.
And then you had optimism because there was a degree of certainty that there would be what we call it the Trump put, which he kind of put that to rest by saying he doesn't watch the markets, or at least the stock market.
It's just amazing how things have changed now. Now the discussion is about tariffs and the impact on growth and so on and so forth. All right, John, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Olaolu Aganga joins us. She is the U.S. Chief Investment Officer for Mercer, joining us via Zoom. Olaolu, John and I were just talking about this. Boy, things have changed in the last couple of months here in terms of the outlook here. When you see $1 trillion market cap loss for a company like NVIDIA, boy, that gets your attention, doesn't it? How do you feel about these markets?
So the concentration in the equity markets has been a problem for some time, and problem meaning like it's hard to be able to distinguish yourself when you have a benchmark that is moving in that positive direction. We're seeing a swing in the opposite way, right? But the concentration is still the same. So when you have a key handful of stocks that are driving markets in either direction, it does create challenges. Now, with that said, we're in a situation now where we're kind of back to pre-election type of markets. But with all of the macroeconomic data that's coming out, we're looking at it, as you all mentioned on your show, economic data was okay this morning. So no surprises from an employment standpoint, but it hasn't factored in the cuts yet.
So how do you manage the volatility at the end of the day? Is it defensive? Is it offense? Is it cash? Is it treasuries?
So a lot of flow, and it all depends on the client portfolio objective. So For some of the longer dated clients, the pension clients, they're heavier in fixed income anyway. They've always, historically been. So this is a boon for them. We're seeing 4 or 5 basis points decline in yields this week. Last week was a pretty dramatic move, especially in longer dated bonds. And if you think of the liabilities the pension clients have, that is something to be mindful of. Then if you're talking about the shorter dated aspect, so the yields on 2-year money market, like those have come down. So if you're trying to earn returns, that may not necessarily be, the best with regards to that point. But there is a more defensive environment, yes, that has been created and some uncertainty around it. The facts are tariffs, no matter which way you look at them, are higher input costs. And input costs for corporations affect them in one of 2 ways. It's either lower margins, so you have to either absorb that. So we'll see that play out in the next few earnings report, maybe. Or if you pass it on to consumers, then you run the risk of potentially lower sales. So the drawback and the drawdowns that we're seeing in the market is almost, what is it? Buy the rumor, sell the news. So it's proactively moving in that direction because of those 2 potential things that can happen as a result of higher input costs for corporations. But we have to see it in the earnings.
Olaolu, since the market started moving higher there in mid-2022, a lot of folks have said, boy, we just haven't seen that 10, 12, 15% pullback in a market that oftentimes can be healthy for a longer-term bull market. Do you think we're approaching that now, or is it maybe even something more problematic?
So, yes, we haven't seen a pretty big drawdown in quite some time. But if you were to analyze post-financial crisis, even when we have, and if you, of course, we all remember the COVID period where we saw even bigger drawdowns, the rebound on that was actually fairly dramatic and fairly swift. So the challenge with that, really focusing on the drawdowns is because you can't time the markets. We can have it could happen Monday, Tuesday, right? We could very much see the potential of that occurring, but positive news that could occur could cause it to move very, very swiftly. So for us, as you are thinking of investing and not trading, right, because there is day trading and you have to be able to move with the volatility cycle if you're day trading or moving that quickly. But if you are investing, the goal is to be able to cut through the noise and go through more sustained themes. As we just talked about, something like corporate earnings. How will that play out if we see higher input costs? So that is what we're doing a lot of work around to make sure that we can look past today, tomorrow, and go through a quarter, 2 quarters, 3 quarters type of thing.
Where does this leave then corporate credit?
So
she laughs at me as I ask. That doesn't bode well.
It's corporate credit, just like equities, right? So 2 sides of the same coin for the corporate entity is not immune. So we've seen a tightening of corporate credit just recently, but now as we're going through a period, now we're starting to see some widening that's occurring in certain pockets with rates where they are, and we're just seeing the volatility. It is difficult with regards to issuance. Now, when rates were much higher, it's expensive for corporations to be able to fund. So if you're issuing new debts, you're issuing them at higher and higher levels. If we see a situation whereby the environment becomes a lower rate environment from here, then for corporations and corporate credit, it's a tighter environment, and that's good to some degree, but it means you're not necessarily earning the yield and call it investment grade credit. So there's the potential for clients moving out the risk spectrum, but right now, not really. Right now, it's sort of wait, but lots of volatility in corporate credit, the similar thing that we're seeing even in treasuries.
All right, Olaolu, thank you so much for joining us. Olaolu Aganga, U.S. Chief Investment Officer at Mercer. Talking to us about this market. And again, that headline that Bloomberg ran just a moment ago, we mentioned NVIDIA has lost $1 trillion in market capitalization on this pullback. I just, you just don't see that kind of headline every day. It's just an odd way to say a lot of money has been lost, just in one name. But
so this is the time that I find really interesting in terms of the headlines that are run to the general public, right? Where I get calls from my friends or my husband being like, oh my God, what's happening? Or do we need to sell stuff? Or what about margin calls? Like when I start to get those questions, I wonder if we're close to something like a bottom, or is there just more of a washout after that?
Exactly. We're still waiting to hear from President Trump. Going to make some remarks here today. Topic unknown from the White House. When that happens, we will bring that to you. S&P 500 off 64 points. That's 1%. The Dow off 374 points. NASDAQ off 1.5%. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. Just to add on to that, NVIDIA shedding $1 trillion in market value from a record high, let's add on Tesla shares now racing election rally down 48%. From that record high. I think we're going to get a lot of these superlatives over the next few hours.
Yep.
Something else that has changed over the last few months is ESG and DEI and how CEOs and how companies are managing that and where policies are still in place and where they're changing. Shaheen Contractor is Bloomberg Intelligence Senior ESG strategist, and she joins us now. How are you guys looking at this now in relation to this administration?
So, Alex, a lot has changed when it comes to DE and when it comes to ESG, as you mentioned. I think the one thing we're seeing is all these companies going back on their DE&I policies, given the changing and current regulatory landscape. And the impacts are really widespread.
All right, so in your note here, you talk about some tech companies like Intel and consulting company Accenture backing off on some of their DEI policies. But they have a lot of funds that are ESG funds that value that DEI stuff. And now the risk is, will those funds now sell their positions in an Intel, in an Accenture? Talk to us about the numbers there.
Sure. So So, Paul, we've done this analysis and we found that about 1.5% of Intel and Accenture's market value is held by these ESG and gender funds. Now, that 1.5% could be at risk if backtracking on their D&I policies cause such funds to sell. So it really brings the risk of these, concentrated positions, as you mentioned.
Is ESG disliked now from investors? Does it need to be renamed? And I guess, how's the performance been?
I think ESG is still mixed. There's such a debate. I think right now a lot of people are talking about term sustainability rather than ESG. I really honestly think this is quite a bit of a moot point because no matter what you call it, people are still doing the same thing. Regarding performance, I think it really still depends on this whole tech versus energy. And right now it's not doing so bad.
So is it still a case where while ESG, DEI are waning in importance here in the U.S., ESG has been for a while. That has not been the case in Europe.
Correct.
Is Europe still embracing ESG as an investing principle?
It still is, though there is a lot of regulatory changes that are happening. So in Europe, there is a lot of regulatory burden when it comes to ESG and reporting, and that's currently facing a lot of, let's just call it, less of a compliance burden. So people are pushing for that.
What do you think the companies, does Intel like the fact it's in an ESG fund? Like, is that good or bad for them at this point?
I think the more funds you're in, the more you like it, regardless of
fair
what
enough.
it is.
You and me movement.
More
All right.
market value.
So the trends here in this country, in the U.S., are decidedly against DEI. I don't know how far it goes or where it goes. Where is it? Like, what are you seeing in the corporate boardrooms and in the CEOs in the C-suite? Are they reflecting that?
So I'll give you an example. So we are seeing a couple of changes. I think Meta's diversity officer was recently given another role.
Okay.
So we are seeing a few changes. I wouldn't say it's too widespread as, things like removal of policies and goals, but that trickle up may be happening.
Yeah, it seems like you just see company after company after company walking it back. But my question is that more of a headline risk story, or are we seeing real change? And it feels like it's real.
Yeah.
We'll have to see how these things play out. I mean, if a company scraps its diversity targets, I can only imagine that that's real change. So we'll have to see.
And we've seen that, like, either in hiring, we've seen some DEI, companies scrap DEI, but also just in terms of the companies we work with, we are not going to require them to have DEI practices. Correct. So there are distinctions, right?
Yes, supplier. And I'll give you an example. So Goldman had a policy where it required a company to have 2 diverse members to be able to take public. They scrapped that.
Right.
So,
which
example.
is different than your hiring goals or promotion goals along those lines. What else are you guys working on right now?
Oh, I am working on, a similar aspect for maybe climate, for example. So things like that. I think we published this water deep dive where water is, one of the most, I would say, hard to examine sectors. So it's the industries, the companies at risk from that and the scarcity challenges.
Do you watch the TV show Landman?
I don't.
If you want a tutorial on the oil and gas, the fossil fuel business from their perspective, boom, that's the one.
There it is.
Okay.
Yeah, that's what the one.
On my list.
Including drama and doesn't he get held up by a gunpoint or something?
Oh, he's got to deal with the Mexican cartel down there in the oil patch.
I see.
It's all a thing.
It's all a thing.
Yeah, and Billy Bob Thornton. He's just
on my nighttime reading list.
Very good. All right, Shaheen, thank you so much. Shaheen Contractor does the ESG stuff for Bloomberg Intelligence. Again, you're right. The headlines coming across, whether it's Tesla or NVIDIA, but you see that when you see market sell-offs like we've seen here. 10% on the NASDAQ 100, 7 and change off the S&P 500 off the highs. And again, a lot of investors will come through this studio and say, this is a healthy part of a longer-term bull market. 10%, 12%, 15% pullbacks in the context of a longer-term bull market. And, you don't know it until you know it, till you're in it. But we'll see how deep this goes.
And I feel like I've been waiting for this for years. So there is that point. We do hear President Trump is speaking at the White House. He is touting on manufacturing a turnaround. He said he's going to sign executive order related to student loans. We will bring this to you on Bloomberg Radio as it winds up playing out. lots to digest this week. It was a very busy week for the markets, and you're looking at the S&P now down 3% on the year. NASDAQ off by over 7% for the year. The move really going into the Treasury market at this point. That wraps it up for Paul and myself. Have a good weekend, guys. Balance of Power with Joe Matthews up next after this global news update.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The government says 151,000 jobs were created last month, and the unemployment rate ticked up a bit to 4.1%. Economist Gus Fauché.
This is exactly where the Fed wants it to be. You know, the Fed thinks over the long run, the unemployment rate should be 4.2%. We were at 4.1% in February. Job growth over the long run should be somewhere between 150,000 and 175,000. Given growth in the labor force, we're right within that range.
On Fox Business, President Trump said he's written to Iran, pressing for talks on preventing the development of nuclear weapons and warning it faces possible military action if not.
I said, I hope you're going to negotiate because it's going to be a lot better for Iran.
On social media today, Trump threatened Russia with sanctions and tariffs if no deal to stop the war in Ukraine is reached. Russia targeted Ukraine's energy facilities in a new string of attacks. In a time of sharp government cutbacks, people are rallying today in several cities to support expanding funding for science programs. Bill Nye, the science guy, tells CBS News.
The reason the United States is the world leader that it is because of our embrace of science. And so to suppress or censor science is very much not in the national interest.
The Texas company Intuitive Machines says the lander it put on the moon yesterday is a loss. CBS News space consultant Bill Harwood.
Photographs from a camera on the lander show it did in fact tip over during landing, and it's now resting on its side in a crater some 820 feet from the planned landing site.
Well, travel on high-speed rail from Paris has been disrupted for hundreds of thousands of people by the discovery of an unexploded World War II bomb. It's now been dealt with and disposed of by experts, but too late for this traveler.
Communication's awful. We talk to one person, they say, go to the help desk, but the queue is over 2 hours long. And by the time you get to the front of the help desk, all the trains for tomorrow are completely gone. So it's just kind of no hope in that.
On the Health Watch today, CBS's Wendy Gillette tells us a new study looks at aspirin and cancer.
The research from the University of Cambridge finds aspirin could possibly prevent the spread of cancer because it may boost the immune system. Dr. Elisa Port is chief of breast surgery at Mount Sinai Hospital in New York.
Theoretically, it could work in a variety of different cancers. Aspirin does have some preventive effect in some kinds of cancers.
Researchers are still determining which patients would most benefit from taking aspirin.
And checking Wall Street, right now the Dow is down 299 points. The S&P is off 52. This is CBS News. 40 years ago today, a notable music collaboration was released.
The charity song featuring dozens of the top music stars at the time was released on March 7, 1985. Michael Jackson and Lionel Richie wrote it. Quincy Jones co-produced it. Cyndi Lauper almost skipped it. She thought the song sounded like a Pepsi commercial. Stevie Wonder suggested they sing some lyrics in Swahili, but someone figured out they don't speak Swahili in Ethiopia. The song was the first single to go quadruple platinum and raised $80 million for famine relief in Africa. Michael Wallace, CBS News.
Amazon is testing artificial intelligence-aided dubbing for about a dozen select movies and shows offered on its Prime streaming service using English and Latin American Spanish. It includes some older films that up till now lacked dubbing. Amazon says people will collaborate with AI to ensure quality control. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Vladimir Putin says he's ready for a truce. Welcome to the fastest show in politics as Bloomberg learns of Putin's position conveyed to officials here in the U.S. President Trump is speaking right now in the Oval Office. We'll have an ear on his remarks and insights ahead on all of this from Bloomberg's Dan Flatley. Jobs Day shows a softening in the labor market. This is the beginning of something bigger. We'll get into it with Bloomberg's Molly Smith at World Headquarters in New York with analysis today from our signature panel. Bloomberg Politics contributors Rick Davis, Jeannie Shanzano with us as Fed Chair Jay Powell prepares to speak this hour at the 2025 U.S. Monetary Policy Forum. We will have his remarks live right here. So let's set the baseline first. And of course, we do that with Charlie Pellet at World Headquarters in New York and his view on Wall Street. How's the market, Charlie?
Right now, just another manic Friday, Joe Matthew, with the Dow, the S&P, NASDAQ, all in decline. Do want to repeat a couple of headlines, one from last hour, both from last half hour. NVIDIA, which, by the way, puts this all in perspective, NVIDIA has shed $1 trillion in market valuation from its record high. Right now, we do have NVIDIA shares. They are trading down by another 2%. The other key headline here, Tesla shares have erased their election rally, down 48% from their record. Bottom line here, a lot of red on the screen. The Dow, the S&P, NASDAQ, all moving lower. S&P, by the way, down now by 1.1%. It is on track for a 4.5% loss on the week. So we've got the Dow down 355, now down 0.8%. Again, the S&P down 1%. NASDAQ Composite Index down 1.4%. The NASDAQ 100 Index in correction territory, down 1.3%, the 10-year 4.22%, the 2-year 3.90%. Gold, a little changed, up 0.1%, $29.14 the ounce, and West Texas Intermediate crude up 1.2%, $67.13 a barrel. So with the jobs report behind us, what about the broader market outlook given the uncertainty over tariffs? Marianne Bartels is Chief Investment Strategist at Sanctuary Securities.
I don't think we're going into a bear market. I just think this uncertainty has created a cloud over investors, and they're kind of frozen. And I can also understand if some business leaders are holding back on some business decisions until they have more clarity on where we stand on the tariffs.
Marianne Bartels interviewed on Bloomberg. The open. After earnings, Broadcom shares, they are holding on to a gain on a down day for the rest of the market. Broadcom right now, AVGO on the ticker. They're up by about 4.9%. Hewlett-Packard Enterprise, it is down now by 16.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now, the Friday edition. Lots going on. Here he is, Joe Matthew.
Yeah, you said it, Charlie. Thank you so much. Happy Friday, Charlie Pellet. Watching Wall Street for us. Boy, correction territory for the NASDAQ. That's how we start our conversation on this Jobs Day with a lot in the air right now. As I mentioned, Donald Trump, the president, speaking in the Oval Office right now. We're going to try to get our hands on that feed for you. Typically, they play that back, but the White House has decided to make this available. Here's your TikTok. Now that we've got jobs under our belt, Fed Chair Jay Powell going to be talking in just about 20 minutes here at the U.S. Monetary Policy Forum. President Trump set to sign some executive orders again later on today. He's also got the crypto summit at the White House on this day that we see a bit of a fit in the crypto space, the fact that the government will not be buying Bitcoin, simply using seized Bitcoin and other tokens to make our crypto national reserve. He'll finish his day in Mar-a-Lago, but we've got a lot to take care of between now and then. And we get to the jobs situation now. A softening in the market. This is something that we predicted here on Bloomberg and told you was coming. 160, I believe, was the expectation. Here are the numbers. We got 151,000. This is what happened at 8:30 this morning. An unemployment rate of 4.1%. Now, everybody knows that this could get a little bit worse. Or will it get a lot worse when thousands of fired federal workers end up getting on the rolls in the months ahead? But we're going to let Molly Smith get to that in just a moment, Bloomberg economics editor. Are we going there right now, James, or do you want to? All right. We've got a feed coming out of the White House. You want to go to the Oval Office live? Come with us here. President Trump right now live on Bloomberg.
Actually, China is one of the better in terms of education, and so we can't blame size anymore. You know, China has 1.4 billion people, but they're very high on their list. The one thing we're doing well on, we're number one on the list, is cost per pupil. We spend more money than any other country in the world by far. So I jokingly say the one thing we do well on is the cost. We spend more money, and yet we're toward the bottom of the list. Yeah.
Mr. President, I want to ask you, the joint address, millions of Americans watched your joint address earlier this week where you warned that there could be a little disturbance that Americans could feel as a function of these taxes, these tariffs. How much disturbance are you willing to accept in the near term as a function of that? And to set expectations, how long should Americans expect things to cost a bit more?
Well, so far, Peter, there hasn't been very much because these numbers are coming out. We're here for just a little over 4 weeks. And these are fantastic numbers. I was watching some of the reports this morning. They were surprised. There could be some disturbance, a little bit of disturbance. I solved a little bit of that because I have respect for our auto companies, and I gave them a little bit of a 1-month reprieve because it was unfair, although I'm sure they'll take advantage of it. I see they're driving a lot of cars into the U.S. to try and avoid the tariffs, and they're taking advantage of it a little bit. But they called me, they asked me, they said, could they have a little bit of help? And I decided, they're American companies, USMCA, and I let them have that. But this really kicks in, the reciprocals, kicks in on, let's see, I guess the 2nd. And I wanted it to be the 1st so badly, just didn't want to be on April Fool's Day. So I made it the 2nd. That's going to cost a lot of money. That one day is going to cost a lot of money, but that's okay. But I don't see it. I don't see anything. I see good reports. I think we're going to have good numbers from the beginning. Now, globalists won't love this because this brings jobs back to America. So if they're coming back to America, maybe you'll lose some in other parts of the world. But the other parts of the world have done very well, and they'll continue to do very well. But I think the United States is going to be doing record business. We'll bring a lot of those 90,000 factories that have been lost over the last number of years. It's been, it's hard to believe. 90,000, think of what 90,000 is. 90,000 plants and factories are gone. We're going to bring back many of those plants and factories.
One day the tariffs are on, the next day they're off. Right now the markets, as you know well, prefer stability. Are you done going forward with the pauses and the carve-outs? Is that it for those?
There'll always be changes and adjustments, and you can't just. I could have, for instance, told the American car companies, no, I'm not going to give you anything, and then you wouldn't have had to say, well, they're getting a little extra. It's just a little bit of a 1-month reprieve. They're very happy about what's happening. They won't have to go across borders, and you see the zigzagging. You have a fender made in Canada, you have something else made in Mexico. We don't want that. We want it made here. But there'll always be some modifications. I mean, if you have a wall in front of you, sometimes you have to go around the wall instead of through it. But I think very little. On occasion, if we can do something, we want to help companies. We want to help companies create jobs. So I could have left that, and you wouldn't have had a minor change. Instead, I was asked by the real majors, the big majors, if they could do this, and I said, yeah, I'll do it. I want you to produce a lot of jobs. And numerous of the people, actually all of the people I spoke to have already been, they're very much on the way to already doing it. That's why you have auto jobs increase. And the man, I don't know him, Sean Fain, I don't know him, and I did great, as you know, with the auto workers, with the Teamsters, with unions, I did fantastically well. Best numbers ever by a Republican. And I have a lot of respect for those people. But Sean Fain, who I don't know, but wasn't a supporter, although the auto workers were big supporters, I watched him last night, and he said Donald Trump is absolutely right on tariffs. He said what he's doing on tariffs is an incredible thing, and it's about time somebody had the guts to do it, because we're going to save auto manufacturing. And I said to people when I was campaigning, you're going to have so many auto jobs, you're not going to believe what's going to happen. We're going to load up Michigan. I won the state of Michigan, as you know. And part of the reason I won it was I got a lot of auto workers that voted for me, Detroit, etc. But I think people are going to be very surprised. Yes.
Thank you, Mr. President. You mentioned in your remarks chips manufacturing, how a significant percentage is now in Taiwan. You also mentioned it in your address to Congress, and you called on Congress to overturn the CHIPS Act, which had bipartisan support in the last Congress. Why would you like to see this particular law overturned, Mr. President?
Because it's hundreds of billions of dollars, and it's just a waste of money. Now, some people have already taken the money and used it. Actually, it's very hard to qualify because they go by race, they go by gender, they go by all sorts of things. Nobody's ever seen anything like it. You won't be able to find those people. So I don't even think anybody can qualify. They have so many different categories. In order to qualify, you have to have so many of a certain race, a certain gender, a certain this, a certain, and I don't think they can qualify, but if they take the money, they better qualify because they'll be watching them. But it's a tremendous waste of money. I didn't give the greatest chip company in the world, one of the greatest companies, I didn't give them 10 cents. They came here because of tariffs, because they didn't want to pay the tariffs. And they also came here because they like the results of the election, because they know that I'm very pro-business and pro-jobs. I mean, I'm pro-business, not for business sake. I'm pro-business because of jobs, because business is producing the jobs. Okay?
On Russia, if I may, President Putin is bombing Ukraine.
Yeah.
Do you still believe him when he tells you that he wants peace?
Yeah, no, I believe him. I believe him. I think we're doing very well with Russia. But right now they're bombing the hell out of Ukraine, and Ukraine. I'm finding it more difficult, frankly, to deal with Ukraine, and they don't have the cards. They don't have the cards. As you know, we're meeting in Saudi Arabia on sometime next week, early, and we're talking. I find that in terms of getting a final settlement, it may be easier dealing with Russia, which is surprising because they have all the cards. I mean, they're bombing the hell out of them right now. And I put a statement in, a very strong statement. Can't do that. Can't do that.
Mr. President,
we're trying to help them, and Ukraine has to get on the ball and get a job done. Michael, could you come up here? I see Michael back there. Good. I'm glad. He's traveling all over the world. I just saw him come in the door. Could you give a little definition of what's going on, please?
Sure. Well, the president has been crystal clear, and he's been clear to all sides. The fighting has to stop. Both sides need to get to the table. We had a good engagement. Both leaders have said only President Trump could do so, and only he has been able to do so. We had an initial engagement with the Russians. The Ukrainians had a great opportunity to bind our economies together through that mineral deal. Unfortunately, that didn't go so well, but we think we're going to get things back on track. Secretary Rubio, myself, and the Ukrainian delegation will be meeting in Saudi Arabia next week to get these talks back on track, get a ceasefire in place, and drive peace home under President Trump's leadership.
This is Michael Waltz, Donald Trump's national security advisor, live in the Oval Office. Here's the president.
I think if I wasn't president, this war would have had no chance of settlement, zero chance. But I think we're going to get it settled and stopped. We got to stop. They're losing on average 2,000 soldiers a week. That's a lot of soldiers. Do you agree, Peter?
It's a lot of soldiers on both sides. I agree. Do you, Mr. President, think that Vladimir Putin is taking advantage of the U.S. pause right now on intelligence and military aid to Ukraine?
No, I actually think he's doing what anybody else would do. I think he wants to get it stopped and settled, and I think he's hitting them harder than he's been hitting them. And I think probably anybody in that position would be doing that right now. He wants to get it ended, and I think Ukraine wants to get it ended, but I don't see it's crazy. They're taking tremendous punishment. I don't quite get it, but I suspect, Michael, he probably wants to get it ended.
He does, Mr. President. The Russians are taking incredible losses on the front. As the president has said, this is a meat grinder of people, of material, of national treasure, and no one else has any solutions except to let this war continue forever. But I'll add, the president has had multiple conversations and a visit from President Macron of France, Prime Minister Starmer of the United Kingdom. We have the NATO Secretary General coming next week. We have this meeting with the Ukrainians. We've had it with the Russians. All of this in the president's first month in his leadership. We will engage in the shuttle diplomacy, and we will continue to use his leadership and what leverage we have to get both sides of the peace table. It's not going to be easy, but President Trump...
This war should have never happened. It would have never happened if I were president, but it did happen. So a lot of other things shouldn't have happened, too. We shouldn't have 21 million people pouring into our country through open borders, many of whom are criminals, very bad criminals, including murderers, thousands of murderers. Many killed, far more than one person, and they're roaming our streets. But Tom Homan and Kristi Noem are doing an incredible job, and we're getting them out of here. And we'll get them out. We'll get them all out. But all these things shouldn't have happened. We shouldn't have inflation. We shouldn't have had this horrible inflation where the prices have gone up. Look at eggs. So we're doing a good job. We're doing a good job.
Mr. President, in regards to the pause on military assistance to Ukraine, you put out on your social media post today that Russia is pounding Ukraine.
That's right.
Why not provide Ukraine with air defenses? And what happens, Mr. President, when Ukraine runs out of the Patriot missile batteries?
Good question. Because I have to know that they want to settle. I don't know that they want to settle. If they don't want to settle, we're out of there because we want them to settle. And I'm doing it to stop death, more important than anything else. Secondarily, way down the line is the money. So we're in for $350 billion, and Europe is in for $100 billion. They should be in for the same or more than us. And, you know, I watched over the last week or so what's going on in Europe. This thing could end up in World War III if we don't get it settled. This could really end up in a World War III. We got to get it settled.
So on Iran, how confident are you that the Iranians will negotiate with you? And is Israel on board with this outrage?
Yeah, I saw the hostages the other day. They came in, people that were not young, some young and some older, much older. And they gave, it was hard for them to do it, actually. They gave statements as to what happened. I was asking, what happened? How was it? I said, did you see anybody in there that was kind, like out of the hundreds of people that you were seeing, Hamas? Did some of them wink at you and say, don't worry, you're going to be okay, or give you a piece of bread, or no? I said, were there any people that were, like, kind? I was shocked. The answer was nobody. There was nobody. Just the opposite. They'd be slapped and punched. One man broke his ribs. He couldn't breathe for a month. It was brutal. I was so surprised. Could you think there'd be a couple of people that would be kind, that would say, you're going to be okay, but they had none of that. It's pretty amazing. Brian?
Thank you, President.
He's a kind person.
Well, according to
although not to Zelensky, he wasn't.
Well, you know what, that's another
but to Trump, he's been good.
Yeah.
Go ahead, Brian.
Nice tie, by the way.
Thank you. Thank you. I like yours, too.
Two questions. One on peace. Why don't you think any other European countries are offering a peace deal? It seems like no one's come to the table for peace except for you.
Yeah. It's a very good question. Sometimes questions aren't answerable. They're in a very unusual position. They don't know how to end the war. I think I do know how to end the war. Despite the Russia hoax, I've always had a good relationship with Putin. And, you know, he wants to end the war. He wants to end it. And I think he's going to be more generous than he has to be. And that's pretty good. That means a lot of good things. Because, frankly, you could have made a great deal if this war never started, you could have made a great deal. I don't know that anything would have had to be given up. This was not a war that was going to start, Brian. And it didn't start. For 4 years, somebody said, well, how do we know that? Well, for 4 years, it didn't start. I used to speak to Vladimir about it. I used to speak to him about it at length. It was the apple of his eye, but there was no way he was going in. And he knew, there were going to be consequences. But it did start. I mean, think of what happened. Inflation, You have the war with Ukraine and Russia, that wouldn't have happened. October 7th would have never happened. Israel, they had no money. Iran had no money. Iran was stone cold broke, and now they have a lot of money. And that's going to be the next thing you'll be talking about is Iran. What's going to happen with Iran? And there'll be some interesting days ahead. That's all I can tell you. You know, we're down to final strokes with Iran. That's going to be an interesting time. And we'll see what happens. But we're down to the final moments. We're at final moments. Can't let them have a nuclear weapon. I think that I would have had a deal within 1 month after the rigged election of 2020. They were all set to make a deal. And then when I lost, they saw this person who's a stupid person, very stupid person. And they said, let's not make a deal. And they were right. He took the sanctions off. They became rich under Biden. They went from having no money to having $300 billion. All in a short period. It's oil. Oil builds up fast. It's a nice living if you have a nice oil well. And they do. They have a lot of nice oil wells, right? So anyway, it's going to be a big thing. It's an interesting time in the history of the world. But we have a situation with Iran that something's going to happen very soon. Very, very soon. You'll be talking about that pretty soon, I guess. And hopefully we can have a peace deal. You know, I'm not speaking out of strength or weakness. I'm just saying I'd rather see a peace deal than the other. But the other will solve the problem.
Mr. President, your allies are calling on you to pardon Derek Chauvin. Are you considering pardoning Derek Chauvin?
No, I haven't even heard about it. No.
Mr. President, on peace.
I haven't heard that.
In the first term, you may recall, I broke the news that you were nominated for the Nobel Peace Prize. And the reason for that was the work that you led on the Abraham Accords. I spoke yesterday with the member of parliament, the Norwegian parliament, that nominated you. And he said what the Nobel Committee is looking for from you, Mr. President, is security guarantees for Ukraine. Is that a possibility, Mr. President?
So before I even think about that, I want to settle the war, get it finished. Because if I'm not here, nobody's going to settle it. And President Macron has said that, and everybody said that, the prime ministers and presidents. We're pushing very hard. That's all I'm thinking about now. As far as the question about security later, that's the easy part. The hard part is getting it settled. We got to get them. We're losing 2,000 human beings every week. More than that, actually. 2,000 nice, young, although they're getting older because they're drafting much older now. In the case of one country, much older, because a lot of the young people have been killed. It's very sad, and I'd like to see if I could stop that. And I'd like to also see if we could stop making these massive payments from the United States. I mean, Biden gave away money like it was water, with no anything, got nothing for it. Europe did it in the form of a loan. They get their money back, we don't. So that's how we came up with the rare earth deal. But we started, behind the 8 ball. He could have gone to Europe. He could have said, come on, you got to put up money with us. You got to put up money with us. But he never did that. They just kept handing money out because he was grossly incompetent. All right, thank you very much, everybody. Thank you very much.
Thank you. Thanks, guys.
All right, there you have President Trump in the Oval Office. A rare treat to get a live feed from the Oval, which is typically a tape playback situation, and a good back and forth there on a range of issues, as we were just hearing the president speak to ending the war in Ukraine, generating headlines earlier on tariffs. The redhead on the terminal, reciprocal tariffs on Canada, maybe as early as today, said the president, although he did reiterate his plans for April 2nd on reciprocal tariffs for the rest. We'll let you know if something happens there. He is set to sign executive orders a little bit later on today in the Oval, and we'll let you know what takes place. It is not a good day on Wall Street. We're preparing to bring you live remarks next from the chair of the Federal Reserve. Jay Powell is going to be holding forth at the U.S. Monetary Policy Forum with the S&P 500 down 51 points right now, about 1%, another 1% loss on the NASDAQ, now officially in correction territory today. NASDAQ Composite down 211 points. The Dow's down 276. That is where we set the baseline here before we listen to Jay Powell, likely to be speaking, of course, to interest rates and the quest to get to 2%. He's also going to be speaking here on what is Jobs Day, and we came in lighter than expected this morning with 151,000 jobs. Payrolls, 4.1% unemployment. This may well help to drive the conversation as well. The VIX back up again today. It's up another 5% above 26, and Bitcoin is lower. There's been some concern, some upset in the market, even though we are watching the White House hold a crypto summit today and hearing a pledge from the administration to create a national crypto reserve. Typically, that would send prices higher, but there is some concern, if not outrage, over the fact that the U.S. is not planning to buy Bitcoin. Will simply be stuffing the reserve with tokens that are already in the possession, seized tokens that are in the possession of the U.S. Treasury market. While we're talking markets, let's get an update before we hear from the Fed chair. This is going to be starting momentarily. Charlie Pellet is with us at World Headquarters in New York, swimming in headlines today, beginning with this NASDAQ in correction territory. Charlie, what do you see on your end?
Indeed, the Dow, the S&P, NASDAQ, Joe Matthew, all very much in the red. We are getting a headline right now from Fed Chair Jay Powell. Says he expects the path to 2% inflation will continue to be bumpy. Powell also saying the Fed does not need to hurry, can wait for greater clarity. We will be having remarks from Jay Powell for you coming up in just a moment. Markets lower across the board. I want to really do big picture here because on the week we are looking at a loss on the S&P 500 index of just about 4.5%. Today moving lower by 0.9%. We've got the S&P down 50 right now at 56.87. Back now to Joe Matthew in Washington.
All right, perfect, Charlie. Let's bring you to Jay Powell now, the Fed chair speaking. This is live on Bloomberg.
We can speak to each other without violating the government of sunshine law. So I have some brief remarks about the economy and the path of policy, and then I look forward to our discussion. Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place. The labor market is solid, and inflation has moved closer to our 2% longer-run goal. At the Fed, we are intently focused on our dual mandate goals given to us by Congress: maximum employment and stable prices. Turning to the recent data, the economy has been growing at a solid pace. GDP expanded at a 2.3% annual rate in the fourth quarter of last year, extending a period of consistent growth that has been supported by resilient consumer spending. Recent indicators point to a possible moderation in consumer spending relative to the rapid growth over the second half of 2024. Further, recent surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. Sentiment readings have not been a good predictor of consumption growth in recent years. We continue to carefully monitor a variety of indicators of household and business spending. Turning to the labor market, many indicators show that the labor market is solid and broadly in balance. The jobs report released this morning showed employers added 151,000 jobs to payrolls in February, and the unemployment rate ticked up 0.1% to 4.1% last month. Smoothing over the month-to-month volatility since September, employers have added a solid 200,000 jobs a month on average. The unemployment rate remains low and has held in a narrow range between 3.9% and 4.2% over the past year. The jobs-to-workers gap has narrowed, and the quits rate has moved below pre-pandemic levels. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. With wage growth moderating and labor supply and demand having moved into better balance, the labor market is not a significant source of inflationary pressure. For inflation, inflation has come down a long way from its mid-2022 peak above 7%, without a sharp increase in unemployment. A historically unusual and most welcome outcome. While progress in reducing inflation has been broad-based, recent readings remain somewhat above our 2% objective. The path to sustainably returning inflation to our target has been bumpy, and we expect that to continue. We see ongoing progress in categories that remain elevated, such as housing services and the market-based components of non-housing services. Inflation can be volatile month to month, and we do not overreact to one or two readings that are higher or lower than anticipated. Data released last week show that total PCE prices rose 2.5% over the 12 months ending in January, and that core PCE rose 2.6%. We pay close attention to a broad range of measures of inflation expectations, and some near-term measures have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain stable and consistent with our 2% inflation goal. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. Policy is not on a preset course. If the economy remains strong but inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our mandate. Before I conclude, I'll note that at our last FOMC meeting, we began our second 5-year review of our monetary policy framework. We will consider changes to our consensus statement and to our communications as part of this review. The consensus statement articulates our framework for the conduct of monetary policy in pursuit of our statutory goals. We will consider the lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. The 2% longer-run inflation goal will be retained and is not a focus of the review. This public review will be familiar to those who followed our process 5 years ago. We will hold outreach events around the country involving a range of parties, including Fed Listens events. We're open to new ideas and critical feedback. We will host a research conference in Washington in May. Our intent is to wrap up the review by late summer. Thank you very much. I look forward to your questions. Anil.
All right. Thanks for that. Before we get into
listening live to Fed Chair Jay Powell in a conversation
more you can
at the U.S. Monetary Forum
about where you think the framework is going to land. It was nice to hear the parameters that you laid out, but is there anything more that you can say beyond what you just?
Sure. So I said there are 2 things really. There's changes to the consensus statement, and then they're looking at really our post-meeting communications. We're going to look at those 2 things a lot. And as it relates to the consensus statement, which is also known as the Statement on Longer-Run Goals in Monetary Policy, therefore it needed a shorter name, we are going to be looking a lot at the changes that we made in 2020. So if you go back to 2020, what we had was we'd been at the effective lower bound for 7 years. We never got rates above 2%. We were at 1.5% when the pandemic hit. And the feeling very much was that if even a mild downturn came, we'd be back to the effective lower bound, maybe again for years on end. So we were looking for ways to try to minimize the likelihood of that. And a pretty standard result in the research was a kind of a makeup strategy. So that's what that was. So the framework changes that we made were very focused on the importance of the effective lower bound problem, which was thought to be the big problem at the time. And those were the changes that we made. And we thought that those issues would be persistent, but the universe had other ideas. And the pandemic arrived just a few months after we implemented the framework and really changed the whole mixture. And effectively, the idea of an overshoot, of a modest overshoot or moderate overshoot of inflation really became irrelevant. And we were back to the regular framework, and we did what we did, and you have the results today. So I think we'll be looking at, for example, the focus in the consensus statement. We'll be looking at the focus that we had on the effective lower bound. It's probably not the base case anymore, but it's probably still relevant. We'll be looking at shortfalls, which is an interesting idea, and there are different ways to express that. And we'll be certainly will also be looking at the idea of having a moderate overshoot of inflation over the 2% target following periods when inflation has been low. We're looking at all of those things, and again, I expect to be done, by the end of the summer. On the communications, particularly our post-meeting communications, we're going to take a close look at the SEP and also compare ourselves to what other central banks around the world do. And this will be a couple of weeks from now. We'll have our second meeting, and I think we'll be done in time for sort of the end of the summer.
Okay, that's great. Let me pick up on this question about the level of prices versus the inflation rate. Economists spend a lot of time making the distinction between the rate of change and the level. I'm not sure that the public fully understands this because you see these surveys about how frustrated people are with inflation. Inflation now is not that different than your target. It's above, but not meaningfully so. But do you think that price stability needs to take into account how far you away from the objective? And if you've had a big run-up and the level remains high, even if the inflation rate is back to normal, is that something we need to reconsider?
The public experience, what the public experiences is the prices of things. And the prices of things went up a lot in 2021 and 22, and to some extent in 23. And when we talk about inflation, we're obviously talking about the rate of change now. But the public's not wrong. They are experiencing high prices, and obviously you can have a great labor market, but if people are really struggling because of high prices, that's what they're really going to feel. So they're right about what they're saying. In terms of, I don't think there's any need to redefine price stability. I think you can always go back to the way Alan Greenspan said it. I won't get the exact words, but everyone here knows the idea is if businesses and households are making their economic decisions without having to consider the possibility of high inflation, that's price stability. I don't think we need to rethink inflation, the way we deal with it. I don't think we need to reinvent price stability. So,
okay. Okay, the elephant in the room. Economists normally assume that a tariff is passed into domestic prices, and as the Secretary of Treasury said yesterday, that would change the level of prices once, but wouldn't mean anything for inflation a year later. If we're looking at what happens over the next year, how would we know if the conventional view is not correct and that it's leaked into something more troubling?
So I think that start with the general thought is that if there's a spike in prices that's a one-time thing that is going to go through the economy, then it's not appropriate to react to it because our policy by design will reduce employment and activity, and it would not have really been needed to be done. So you look through those things if you can. So if you put that in the context of tariffs, I think if you look at where forecasts are, look at the blue chip, look where everybody's forecasting some inflation effect from tariffs. So it's very likely that if tariffs are imposed, and let's remember, we really don't know what's happening yet. We're at a stage where we're still very uncertain about what will be tariffed, for how long, at what level. We're going to have to wait to see all of that. But the likelihood is that some of that will find its way. It'll hit the exporters, the importers, the retailers, and to some extent the consumers, and we'll see what that is. And in a simple case where we know it's a one-time thing, the textbook would say look through it. But I think the situation you would want to also be sure of a couple of things. One just is that if it turns into a series of things and it's more than that, and if the increases are larger, that would matter. And what really would matter is what's happening with longer-term inflation expectations and how persistent are the inflationary effects. You want to look at all of those things, and you'd want to remember the current context, which is we came off of very high inflation, and we haven't fully returned to 2% on a sustainable basis. So you got to put all that in the mix as you make this decision. I would point people back to 2019, when we We had the Tax Cuts and Jobs Act, we had lower immigration, and we had, regulatory policy under President Trump in the first regime. And, we wound up cutting 3 times because growth weakened so much. So there are many effects of tariffs. And as I pointed out, it's really the effect of all of these policies that matter for our policy. It's not simply what's happening with tariffs. It's what's happening with growth and all the other things as a result of these broad changes in economic policy, not just tariffs.
Okay, just to put a point on this, I think I know what you're going to say, but the usual rule that economists hold is that when an uncertainty is high, we're gradualist. And I'm wondering whether you view that as the right benchmark or anchor to think about.
I view it as the right benchmark or anchor for right now, and that's because the costs of being cautious are very, very low. The economy's fine; it doesn't need us to do anything really, and so we can wait and we should wait. I think there are cases where uncertainty is high, where that would not be the case, where the costs of going slow might be high, and those would be, for example, if inflation expectations were clearly under pressure, or if you're at the beginning of the pandemic and uncertainty is unquestionably elevated, but you nonetheless act very aggressively because of the potential cost of not doing so.
Okay, that's interesting. I'll ask a couple more conjunctural questions, but there's a lot of people in the room here that are very curious about what you want to say about the Basel III endgame. So that's inside baseball, but people's wallets depend on this. So you want to say anything about that?
Sure, absolutely. So our view at the Fed is we very much intend to complete the Basel III endgame. And we think that's very important. We think that the Basel Accords really are important to set sort of minimum standards for international banking around the world. And we expect that we will. We're kind of on hold until the U.S. banking agencies are really back up and running with new leadership. But once they are, we fully expect to get back to that work and complete the Basel III endgame. And I have a good reason to think that we'll be able to do that.
That's good news. Another little bit of inside baseball, but there's been a lot of discussion in the last few weeks about changing some of the statistics that are emphasized about the economy. And the Commerce Department recently disbanded the Federal Economic Statistics Advisory Committee. And I know during COVID, you felt like there were many indicators of the economy that were kind of broken or not so helpful. So do we need to worry about whether the Fed's ability to do its job might come into question because of deficiencies in the statistics? And are you already, let's do that, and I'll ask a follow-up.
Yeah, so there's 2 different things. I think it needs to be said that the government data we get from government-gathered data we get from the Bureau of Economic Analysis and the Bureau of Labor Statistics is incredibly important and really the gold standard for data. Being able to track what's going on in the economy is very, very important, and it's something that the United States has led in for a long, long time, and something we need to continue to lead in. It's true that survey responses have gone down, and that some of the data have become more volatile. That just means it's something we need to keep doing and invest in. So I think that's important. On the pandemic data, that's a different thing. You needed to measure things like how many people are going to restaurants, how many, you could look at open table data and things like that. So there were lots and lots of pieces of data we were getting about that showed how many people are coming back to work, riding the subway and that kind of thing. And that was important. It turns out all that data isn't super relevant except in an emergency. The other thing is, though, at the Fed, we've always, for some time now, we've been, trying to work with these very large data sets that are available in real time now, for example, from credit card companies and things like that. And, trying to use these new and vast data collections in a real-time way, is something that's really helpful.
Okay, I was going to ask you about whether or not there's some favorite private sector statistics that you think everybody should be looking at, but it sounds like you've just given us a hint on that. Let me ask a couple longer-term questions. I know you're not in the job of reflecting yet, but when we look back at the rise of inflation and then its decline, what do you think the lesson's going to be about what we've just lived through?
Yeah, so I think it's actually still early to say. I think the question of what happened and why and what all those questions around the events of the pandemic and the inflation and the efforts to bring inflation down. Economists are going to be battling over that for long after all of us are gone. But I would say a couple things. One thing is just that the tails are fatter than you think. However fat you think the tails are, they're fatter than you think. And human nature is, we always talk about uncertainty and how we understand everything's highly uncertain. We say it all the time. The tails are fatter than we think. So nobody saw the pandemic coming, obviously. It wasn't reflected in our framework. When it came, we just went back to the old framework and dealt with it. But it was, there's always possible. That's one thing. Secondly, I think if you look, I talked about this at Jackson Hole last year. If I look back and it looks to me like what you had was a global burst of inflation everywhere at the same time, and largely you got to look at global factors, and it amounted to very strong demand, stronger than we thought. I don't think we had, the forecast error was two parts. Part one was demand was just stronger than we thought. It really was. We had in mind the recovery from the global financial crisis, and instead we got this really high-powered response, expansion, recovery. So the other side is the supply side. The supply side was constrained. We lost 8 million workers, and it took a long time to get them back. And it was also all of the supply stuff that was happening. That took longer than we thought to unsnaggle. And we'd never seen it before. We knew in real time that it was going to be really hard to get that right. But so those two things created inflation globally, and central banks stepped in, and pretty broadly, we're back to close to mandated inflation and employment close to the natural rate, not just in the United States but everywhere. So in a way, the framework worked, but I think we learned some of those lessons, and we'll still be learning them.
Okay, one other question in this direction. The U.S. has actually had the fastest recovery of all the major economies. And do we understand why that is? And there was a question in the last panel about Y-star and potential growth. Do you think that we are learning something now about what the speed limit for the economy is, or is this just happenstance?
Yeah, I would put down the U.S.'s outperformance to three things. And the first is one would be structural characteristics, and that's more flexible labor market, highly developed capital markets, culture of innovation, rule of law, all the things that make this. And we have a venture capital industry. Other countries are trying to do early stage financing out of banks. That's not going to work. So all of those things make us account for 40 years of productivity. That's double Europe's productivity. It increases. So that's thing one. Thing two is just population. We had a big population increase in 22 and 23, and that doesn't help with per capita, but that moves top line. And what was the third thing? Oh, productivity. So we had a really significant burst in productivity, and from a range of factors, you can never tell exactly where it's coming from. Some of those factors suggest, this gets to your last question, suggest that productivity will be kind of a one-time event. So, people were wound up automating a lot of functions in retail, and because people didn't want to work in retail anymore. But that may just be a one-time thing. Technological developments, on the other hand, might give us years and years of productivity. So there are a whole bunch of other things, and so we don't really know how long this burst in productivity will be sustained. But I think I never expected to see productivity this high for this long. And our staff is marking up their estimates of potential growth for now and taking some signal about the future. You won't have that population thing going forward, but productivity has been really strong, and I think it does actually raise, at least for the relatively near term, the level of potential output.
Okay, that's good. Okay, 30 years of teaching Booth students, I've learned you have to end these things with a fun question. So, who's your favorite central banker? And I'll give you a hall pass on anybody that was on the board while you've been there.
What defines favorite central banker? Living?
Okay, you can constrain to living, or you can specify dead.
Well, I mean, I would have, I don't know.
Open-ended question.
I'll take the easy route and say Paul Volcker, whom I did know over time, and pretty obviously in central banking, nobody wants to be working in a central bank when inflation is really high, but everybody who works in a central bank knows what they have to do when inflation is high. And he set the gold standard for that. That is the thing. Most of the time, for 40 years, we haven't had to do that. It's just kind of demand management through a regular cycle. But when you have very high inflation and you have to do this is why we're independent. It's not for the good times. It's for the times when we're doing something which may be unpopular. That is our assignment. And I think Paul Volcker kind of established that. That was really not quite so clearly established at the time. So I'm going to go with Paul Volcker.
Okay, I'm going to out you on a private conversation, but I don't think you're going to mind too much, which is the Cork Center that hosts this event has a bunch of experts panels of economists where you can go ahead and answer a bunch of questions. They'll tell you who your favorite economist is. And Jay Powell's favorite economist is Anil Kashyap.
Let me tell you, it's a true story, and that was not a happy day. To learn that,
Anyway, well, thank you, and we're so glad that you were able to be here and share your thoughts. And
Great.
So,
thanks very much.
There you have it, short and sweet from the Fed Chair. Jay Powell with us here on Bloomberg from the U.S. Monetary Policy Forum at the Chicago Booth School. I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg Radio, on the satellite channel 121, and on YouTube, where you can find us right now. Search Bloomberg Business News Live, because we've just gotten started here with a lot to talk about. Kaylee Lyons, next to me here, I should say, a little early, couple minutes early. Nice to see you here as we were listening to Jay Powell on what is a jobs day and a down day, Kaylee, with the NASDAQ officially now in correction territory.
Yeah, although interestingly, as we heard from the Fed chairman, stocks have come up the lows. We're actually now almost in positive territory once again on the S&P 500, even though arguably what we heard from the chairman is a lot of the same things he's been saying for some time now, which is that, yes, they don't need to rush to adjust policy. They've been on hold, as we know, but he did acknowledge some uncertainty in the economic outlook. And it was interesting to hear from him in his statement that they are trying to separate the signal from the noise when it comes to this administration. I guess that makes the Fed and literally all the rest of us, too.
Well, that's absolutely right. Although impressive, to your point, to see this turn in the markets, because things were decidedly negative in the outset this morning and following those jobs numbers. We are still seeing declines in Bitcoin, but that's also coming off its lows today. Some upset over this idea of a national crypto reserve not actually buying the tokens, just using seized tokens, at least for now.
Yeah, basically just putting what the government already has into the reserve. They're not going to be buying Bitcoin, which was the hope of a lot of traders, that was going to provide some juice for the cryptocurrency. It was interesting to get a note in my inbox today from Terry Haynes of Pangea Policy saying Trump is gaslighting crypto again. This, of course, is crypto executives are convening just about half an hour from now at the White House for the inaugural White House Crypto Summit, and we'll have more on that later this hour. But of course, we have to continue to digest economics first. The jobs report we got today, the reaction we got from the Chairman Powell, and how financial markets are viewing all of that. So Charlie Pellet up in New York will bring us the latest on where we're trading on this Friday. Hey, Charlie.
Well, hello there, Kaylee. We are looking at a down day here with the Dow, the S&P, NASDAQ all declining. As you guys came on the air just a couple of minutes ago, we did have the Dow Jones Industrial Average higher, but right now looking at a loss of 45 points, a decline now of 0.1%. We've got the NASDAQ Composite Index down 103, drop there of 0.6%. A tough day for a lot of big tech names. The S&P, to keep it all in context, down 23 now, a decline of 0.4%. The NASDAQ 100 Index lower by 0.6%. We are looking at NVIDIA shares down now by 1%, Amazon down 2.7%, and Microsoft tumbling by 2.2%. S&P 500 Index almost almost wiping out its losses, as Fed Chair Jay Powell saying the economy is doing fine, while reiterating that officials remain in no rush to cut rates. The 10-year at 4.26%, with the 2-year currently yielding 3.94%. Spot gold down $4 the ounce, $29.07, down 0.1%. West Texas Intermediate crude 66.99 a barrel, up 1%. Bitcoin, a lot of headlines there today, which you guys just covered. Bitcoin lower now by 2.6%. Bitcoin at 87,405. Briefly after earnings, keeping an eye on Broadcom on a down day for big tech, on a down day for the rest of the market. Broadcom up now by 5.4%. Also, shares of Hewlett-Packard plunging after earnings, down now by 6%. Again, recapping on this Jobs Friday, the Dow, the S&P, NASDAQ, all in the red, a drop now of 0.4%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here on Bloomberg TV and radio on this Friday, Jobs Friday at that. And what a coincidence that the Jobs Day actually coincides with pretty lengthy remarks from the Fed Chair, Jay Powell, before the Fed enters its blackout period. Its March meeting, of course, week after next. The Fed is not expected to do anything at that meeting, and the chairman basically confirmed it, as he suggested once again. There's no hurry to make further policy adjustments. And it was interesting to hear from the chairman, Joe, this notion that the path to returning to their inflation target has been bumpy. He expects that to continue, and perhaps further bumpiness assessment is required when you're considering whether or not there is going to be tariffs that would have an inflationary impact. As we heard President Trump in the Oval Office just in the last hour, after giving some reprieve to Canada just yesterday, saying reciprocal tariffs on Canadian lumber and dairy could go into effect as soon as today.
Today, or not.
Or not.
Which seems to be the problem. Although watching the markets lift off their lows, I guess, was encouraging after the NASDAQ fell into correction territory earlier today. Michael McKee is actually there. He was in the room for Jay Powell's remarks and joins us from the U.S. Monetary Policy Forum. This is sponsored again by the University of Chicago Booth School of Business. Michael, it's great to see you. Thanks for coming on. As Kaylee mentioned, the big takeaways here, the big headlines, the Fed doesn't need to hurry, could wait for greater clarity. The path to 2%, Michael, going to be bumpy. So nothing's new, is it?
No, there's really not a whole lot new here. I think maybe what fed the market reaction, the brief recovery that you had in the markets, was just the sense of calm that the chairman exhibited, the idea that the Fed doesn't have to do anything right away because the economy's in good shape. He talked about how the labor market was in good shape. Inflation is coming down, still too high, as you mentioned. It could be bumpy, but he wasn't giving a lot of warning signals that there is something wrong at this point that the Fed would have to react to. Now, obviously, he said tariffs could be inflationary. They're anticipating that prices will go up. But because we have no idea exactly what the president is going to do, the Fed at this moment has no idea what it's going to do. And that's kind of where everybody else on the Fed is at the moment.
Well, and is it the Fed's biggest potential problem right now, Mike, is that the consumer has no idea where things are going either, and we're starting to see consumer inflation expectations pick up. He did call that out today, although he noted it's not necessarily in longer-term expectations, and that's really what they care most about.
Well, we did see the University of Michigan's 5-year inflation expectations move up in the last month. We'll get another report from Michigan next week, and we'll see where they are. Also, the New York Fed does its own survey of expectations, comes out next week. So we'll have a better idea. Of course, the Fed won't be talking at that point. But they are worried that if we see a continual series of tariffs, as the president sort of continues to threaten, that might drive consumer expectations higher. And we did see expectations rise, both on the short end significantly and the longer end a little bit, just on the headlines that you were getting from the president on tariffs after he came into office. So people are very sensitive to that. And Jay Powell made the point that this is not the pre-COVID era. People are used to inflation now, and so they're perhaps more sensitive to the fact that it could jump up again.
And by considering the Fed's dual mandate, some of the concerns surrounding the job market, not in this report so much today, but concerns that thousands of fired federal workers could really change the trajectory of growth in the labor market. How would that change the Fed's view when it comes to interest rates?
Well, it would be an interesting question because it would depend on how serious it is. Federal workers, all of them, about 2 million of them, make up about 1.5% of the total labor force. So if several 100,000 lose their job, it isn't going to make a big difference. It could bleed over into other sectors, though, as people whose jobs are built around these federal government workers, restaurants or stores or things like that. If people lose their jobs, we could see an expansion. And obviously the contractors, the civilian contractors who do work for the federal government could lose their jobs. Now, if that starts to spread, then you get perhaps a psychological effect on the rest of consumers who start to worry about their jobs, and then they pull back on spending. And that's the classic way a recession starts.
Well, and wouldn't that suggest, Mike, that while everybody's, to Joe's point on the dual mandate, trying to focus on the inflationary side, and that's preliminary or primarily what the Fed has been keying off of too, that actually the growth risks might be greater or just as great as the inflation risks right now, as we are seeing that consumer pullback potentially that you're talking about, that could be further fueled.
Well, the problem for the Fed is they're caught in the middle here, and they're very happy with the fact that right now inflation's coming down slowly, but coming down, and the labor market is solid. The problem is if the labor market deteriorates a lot, that's a suggestion that we're going to see growth fall off, and then you start to worry about recession, and then you start thinking about cutting interest rates. If inflation rises, then they would have to start thinking about raising interest rates, which would also probably lead you into recession. So they'd be caught between a rock and a hard place. So they don't have a lot of good policy choices if this all goes pear-shaped. And there is a genuine consensus, I think, at the Fed and among people on Wall Street that President Trump has a very, very narrow path to make this work.
We're looking at a rising stock market at this point. Mike, the S&P's up 10 points. We were sharply lower earlier. The NASDAQ in correction territory this morning, now up 18 points. I realize it isn't rally time, but the turnaround was significant. You credited that to the calm that Jay Powell spoke to the markets. He's got to be quiet for a little while now. How damaging could that be for a nervous Wall Street?
Well, it depends on the psychology of markets, which I can't claim to know at this point. If there was a feeling and an ongoing feeling that a sell-off was due, which I think there was, and you're looking for reasons to sell, then you have to ask, where are we in that cycle? Next week we get the inflation numbers from the CPI, and then we'll get those Michigan numbers. Will those contribute to a negative feeling that's enough to keep markets going down, or have we gotten back to a little bit more of proper valuation, and people will either hold and wait and see what happens with the tariffs or start to go back up again?
All right, Bloomberg's Michael McKee live on the scene where we just heard from Chairman Powell. Thank you so much. As we consider what Mike was just talking about, tariffs, this is actually something that our colleague, Jonathan Farrow, had the chance to speak with the National Economic Council Director, Kevin Hassett, about earlier this morning, as once again, we're getting new headlines from President Trump around tariffs he may or may not impose on partners like Canada. This is how Director Hassett spoke about it.
I think in some sense that you've got quite a bit of clarity already. There's no uncertainty. There's going to be some tariff. It's going to be reciprocal. If you don't like tariffs very much, then reciprocal could be a great thing for you, because then countries around the world will be lowering their tariffs. But the president believes that if we replace income tax revenue with tariff revenue, it can make everybody better off.
Make everybody better off, Joe. Of course, not all economists are privy to that same view.
No, and it brings us back to this idea of short-term pain, this adjustment that the market may, or the economy itself may or may not be going through here, what this could mean longer term for tariffs with China. Markets don't have a lot of tolerance for that kind of talk right now, although I guess we are seeing a better vibe in stocks since Jay Powell spoke. But this idea of a short-term correction has yet to be quantified.
Well, yeah, certainly. And we talk about better vibes today. Better vibe just means we're roughly even on the major benchmarks after they have fallen to below the levels where they were on Election Day, after we found out that it was President Trump who was the victor in that. The NASDAQ 100 earlier today, as you mentioned, Joe, fell into correction territory, though it's not clear whether or not we're going to end the trading day there. So obviously the stock market is not the economy, but the economy is feeding into what we're seeing in the stock market. And on this jobs day, we want to reflect more on just how healthy the economy is and turn to Kitty Richards. She's senior strategic advisor and senior fellow at the Groundwork Collaborative. Welcome back to Balance of Power. Kitty, if we could just begin with the data we do have in hand today, a jobs report that showed a little bit higher unemployment of 4.1%, but stronger than expected manufacturing payrolls specifically. What read does it provide you on the labor market right now, knowing that everything that's happening with cuts in the federal government is not yet reflected in these figures?
Thank you, Kaylee. Yeah, I think it's really important to understand that the chaos that the Trump administration is sowing in the markets and among consumers has not yet had a chance to really filter through to the broad economic indicators, things like the BLS jobs day. And the cuts that are being made to the federal government workforce are really going to start to hit home, not just in the labor market, where we're going to see laid off workers trying to find new jobs, unable to make rent payments, mortgage payments. This could cause real problems in local economies across the country because federal workers are not just in the DC area, but also the services that those government workers are providing are going to start degrading rapidly. And, we're hearing that the Trump administration is looking for a short-term correction for long-term benefits, but it's really clear who's going to benefit from these policies, if anyone, and that's Elon Musk and the other billionaires that are currently running the government. Workers are going to see the CFPB has been gutted, and they're going to see financial institutions taking advantage of them and their families with no watchdog to stop it. They're going to struggle with the Social Security Administration, where the Trump administration ousted the head of SSA so that they could get their hands on sensitive data and are now threatening deeper cuts to services while also lying about non-existent fraud in the State of the Union. All of these things are going to start to show up in the labor market, and they're already showing up in the lives of workers and families.
Well, I'll tell you, I don't know to what extent there was lying about fraud, but we were just talking to Michael McKee about the impact of federal worker layoffs. As you talk about this yourself, Kitty, could we be in a world in which this effort by the Trump administration and the ancillary impact that you're describing is what prompts the Federal Reserve to start cutting rates again?
I think that the Fed is in a really difficult position because the Trump administration is simultaneously engaging in these federal worker cuts that absolutely could ripple through the economy and cause contraction, while also sowing chaos in the markets and threatening things that might drive up inflation. And so it's a really difficult situation. I will say that I believe that the Fed should have cut interest rates more quickly than they did, and we are still seeing persistent inflation problems in the housing sector. But that's not going to be aided by the Fed holding mortgage interest rates and other interest rates higher. Those interest rates are really harming American families as they go out into the world and try to purchase homes, try to pay their rent, try to make ends meet in the current environment. But it is really difficult to do monetary policy when there's this much chaos.
Well, to your point on mortgage rates, we have seen them come down as we've seen bond yields falling specifically. And this administration has contended, Kitty, that they don't necessarily need the Fed to be cutting interest rates, that there are mechanisms through which they can actually bring rates down on their own and still have that relief provided to wannabe home buyers or people who need to borrow money that you're alluding to. Are there actual fiscal means with which they can do that in your mind?
I mean, the government has a lot of power to make homes more affordable, but I don't think anything the Trump administration is planning gets at that core issue for the American people. There are lots of things that the government can do to bring down the prices of healthcare and groceries and the things that Americans rely on. And the Trump administration is moving in the opposite direction. So I wouldn't take those promises at face value.
We had a conversation with Larry Summers just this week, getting back to this idea of short-term pain for long-term gain, I think, as you described it. Kitty, Larry Summers, the former Treasury Secretary, says that's the new transitory. It sounds like you agree.
If we're talking about the Trump administration's promises that somehow this chaotic approach to managing the economy and allowing the wealthiest man on earth to loot the federal government is going to somehow eventually trickle down to workers, I think that that is preposterous, and we're not seeing any evidence of that. I don't think that we can take these claims at face value at this point. And so I agree that it would be silly to take the Trump administration's claims about their policies and evaluate them without reference to all of the other wild claims that they have made, and none of it is playing out in the data. We know what is going to happen when you have a government that is cutting sweetheart deals with Tesla, rampaging through the federal workforce, cutting services to people, all in the service of tax cuts for the very wealthiest and corporations, which is what the Republicans in Congress are currently working toward. We have 50 years of evidence that that kind of behavior harms American workers in the short, medium, and long term.
Well, if you just consider then the administration's objectives, if you don't agree with their policy that they've suggested as a means of getting there, Kitty, if the objective is to juice American growth, to incentivize American manufacturing, what is the proper way to go about that if it isn't raising tariffs on trading partners and cutting taxes as they have outlined?
I mean, the Inflation Reduction Act investments in manufacturing and reshoring are beginning to bear fruit now, and this administration is trying to roll all of those back. I think the way that we invest in American manufacturing, American workers, is by investing in American manufacturing and American workers, not by capriciously threatening our closest trading partners with tariffs that do nothing but roil the markets, while also, by the way, behind the scenes, walking back things like promises to close loopholes that allow China to ship goods into the United States without inspection. This policy is just really incoherent, and so it's difficult to evaluate it on the merits. But I do think that we have ample evidence that an investment-led strategy can be really helpful. And we saw business investment, private investment, go up near the end of the Biden administration. And that was the fruits of the investments that the administration made over the course of the pandemic and the recovery from the pandemic.
Kitty, it's great to have you back. Kitty Richards, Senior Strategic Advisor, Senior Fellow at Groundwork Collaborative, in the wake of Jay Powell's comments and on this Jobs Day. We are tepidly higher on Wall Street after a very negative start to trading here, Kaylee. The S&P 500 up 6 points. NASDAQ is up 8 after touching correction territory. The Dow's up over 100 points. Big jump in McDonald's today, which might speak to this whole theme that we're touching on.
Yeah, and this theme obviously doesn't just apply to equity markets. We're looking at the bond market as well. Interestingly, while yields were lower in the aftermath of today's jobs data, once we heard from Chairman Powell, they ticked up a bit. We're up 2 basis points on the 10-year, 2 basis points on the 2-year as well. Those yields 4.29 and 3.97% respectively. And Bitcoin, 88,000 as the White House Crypto Summit kicks off today.
You wouldn't think that was happening based on the price action, but there's some concern about using seized coins, not buying new ones. We'll talk about that coming up next, right here on Balance of Power. This is Bloomberg.
121 on Wall Street. We do check markets all day long here at Bloomberg. Jay Powell says the economy is fine. Stocks bounce back. And right now we have got the Dow, the S&P, NASDAQ. They are all in the green. However, a roller coaster week for markets, ending with stocks whipsawing between gains and losses. Keep in mind that at one point the S&P 500 index was down 1.3%, but it is now higher by 0.1%. The S&P right now up by 5. The Dow up 85 now, up 0.2%. NASDAQ also reversing earlier losses, up 4 now. Little changed on this Jobs Friday, but the NASDAQ 100 index swinging between gains and losses. Right now it is down 4 points. We'll call that unchanged on the day. The 10-year at 4.29%, with the 2-year currently yielding 3.97%. Spot gold is down 0.2%, 29.04. West Texas Intermediate crude just above $67 a barrel. WTI up by 1%. Bitcoin, a lot of headlines today, holding just above $88,000 on Bitcoin. It is lower now by about 2%. Sources tell Bloomberg the software firm ServiceNow is planning to relocate its headquarters to West Palm Beach from Silicon Valley, boosting the South Florida city status as a nexus of money and power. ServiceNow, it is lower by 2.3%. Again, recapping here, stocks are higher. The Dow, the S&P, NASDAQ all back in the green, with the S&P up 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, keeping an eye on the markets for us from New York. Thank you so much. Meantime, in Washington, we're particularly interested in the price action in Bitcoin today, because if I were to tell you, it would actually be down the day after a long-awaited executive order to establish a strategic Bitcoin reserve from President Trump was signed, you might not necessarily believe it. Of course, he talked about this on the campaign trail. He said he would do it. It just finally came. Part of the whole promises made, promises kept thing, I guess, Joe. But those who invest in crypto specifically may have been hoping that this promise was going to be kept a little bit differently, as in this would mean the government was going to start buying Bitcoin rather than just taking what the government had already seized and putting it into this reserve.
That was the dream, which I guess could still be realized, but they're going to start this way. Scott Bessent was talking about this earlier today in an interview, suggesting that at least they're going to stop selling Bitcoin, create the reserve, and then maybe move on from there. But there's been a lot of disappointment around this lately. The post on Truth Social a couple days ago that suggested, investing in a series of different tokens sent Bitcoin lower. And now here we are again today, although it's coming off its lows of the session.
Yeah, and I would point out that David Sachs, the White House crypto and AI czar, did join Bloomberg earlier today and talked a little bit about this. This is what he said.
The reason why we need a Bitcoin reserve is that the federal government already owns some. In fact, it obtained around 400,000 Bitcoin over the past decade through criminal and civil forfeitures and seizures. And so the government has to have a strategy for how it deals with this.
Our conversation with Kristen Smith, the Blockchain Association CEO, is with us at the table as the Crypto Summit gets underway down the street at the White House. Kristen, it's great to see you. Welcome back to Bloomberg TV and radio.
Great to be here.
What do you make of this frustration? Do you share it? Were you hoping that the White House was going to start buying
No,
Bitcoin?
I think what happened last night with the executive order that created a Bitcoin strategic reserve and a digital asset stockpile, I think it hit the nail on the head. This is exactly the type of signal that we need to show that the United States is serious about keeping the capital, or making the U.S. the crypto capital of the world, but doesn't go so far that we have the U.S. government going out there into the market and buying digital assets. I think, as the AI and crypto czar David Sachs pointed out earlier on Bloomberg today, that the U.S. already has a lot of these assets. We need to take an inventory, put it in one place. But I do think that there were some around the world that don't fully understand the limits of executive power. I think if you want to have the government going out and spending money to buy crypto, that is something that Congress needs to do, and that is not within the scope of the executive order. So I think there's maybe just a misunderstanding of the powers that are out there. But, I'm excited to see this established, because I think we're really ready to move the conversation on to what can we do to establish a regulatory framework that keeps the U.S. competitive for generations to come. And a lot of that work right now is happening on Capitol Hill with negotiations around stablecoin bill, market structure, and some of these other issues. And so I'm excited to see this issue hopefully put to the side for now so we can focus on the really difficult work of finding the right regulatory framework.
Well, to your point, Kristen, on Congress having to play a role here, we did get a statement from the chair of the House Financial Services Committee, French Hill, today, which in part read, I encourage the administration to collaborate with Congress, particularly in regard to the structure and any funding related to the strategic Bitcoin reserve. Are all parties aligned on not just this, but the other things you were talking about, the way in which to pursue a strategy around market structure and stable coins? Is David Sachs going to be singing the same tune as Chairman Hill or Chairman Scott, for that matter?
Yeah, I mean, I think everybody's aligned with the goal, and there are a lot of different ways, I think, to get to the same goal. And I think a healthy policymaking process is the one we're having now, where we allow different ideas to be vetted, debated, suggested, and to allow this collaboration. But I think the fact that we have the White House that is convening industry to hear from them, they've invited representatives from Capitol Hill to join. We've had David Sachs go to the Hill and be part of press conferences there. I think the type of collaboration going on between the agencies, between the White House and between Congress is very important to making sure that all of the considerations are in place. I think what we saw over the last 4 years is we weren't having that kind of dialogue. We were instead just seeing enforcement actions, a lot of litigation, and that wasn't the right approach. This open dialogue, discussion, and debate is exactly what we need, and I'm really confident that we can build on the legislative work that Congress did last year and get these items in place as we move further along into the year.
So clearly you see this as a legitimizing action today, this executive order. When you look at the language, though, that David Sachs has been using, any acquisitions would require budget-neutral strategies.
Yeah.
This is Washington. How long do you need to wait for that?
Yeah, well, I mean, listen, I think that there's going to be a brainstorm as to how potentially we could add more Bitcoin. I mean, one idea I do think this would also require an act of Congress, is let people pay their taxes in Bitcoin, or let's collect all these tariffs in Bitcoin. I mean, I think there's a lot of way that we can bring Bitcoin.
Is China paying in Bitcoin?
Yeah, exactly. So, there's ideas out there, and I think, the key is that the White House doesn't have the authority to spend taxpayer dollars that Congress hasn't given them. And so this is, I think, a really smart way. I think they've thread the needle, and I think it sends a strong statement. I think there may be some disappointment in the markets today, but, I think as we move forward, this is a really stable policy and not something that would just be undone with another, stroke of the pen in a future administration.
So to Joe's point on it lending legitimacy to the industry, is that also what today's summit is about, or are you expecting that there's going to be tangible outcomes from all of these executives meeting at the White House?
Yeah, no, I mean, this is an absolutely historic day. I think 16 years ago, when Satoshi, issued the white paper and then, Bitcoin was running, I don't think anyone could have imagined something like this happening at the White House. I mean, this is absolutely historic. I think it really sends a strong signal that crypto is valued here in the U.S. This is an important industry and that we want to lead. And I do think we could see some further announcements today. I mean, I think that we are looking at things in sort of two steps. The first step is we need to undo the damage of the last administration. The second step is we need to put the regulatory and framework in place that allows the U.S. to be competitive for generations. And so I do think we can see a lot of discussion today about, what are the outstanding remaining items that we need to change from the last administration. There's a lot of guidance out there. There's a lot of proposed rulemakings that could be very damaging. We need to wipe that away so we can roll up our sleeves and do the real work to get the regulatory framework in place.
How big is the tent at the Blockchain Association when it comes to meme coins? This White House has cranked a few out, and there's an argument about whether this actually helps or hurts the industry.
Yeah, no, it's interesting. I mean, I think meme coins are, a perfectly legitimate and wonderful technology, right? People are allowed to enjoy novelties, they're allowed to have fun, and that's what meme coins do. I think, there is a little bit of anxiety when you have the president playing in this space. I don't think he's doing anything wrong. I think he's doing everything that is allowed under the law. There has been legislation that Congressman Liccardo introduced that would prevent elected officials from issuing their own meme coins, and I think that's an important debate for Congress to have. But I mean, listen, we went from a president who, his administration did everything within their power to try to stop this industry, to a president who is all in, who is very enthusiastic enthusiastic and who's participating. And so, I will take the challenges of an overly enthusiastic president any day compared to having to deal with Gary Gensler in the last administration.
Well, and so that brings me back to your point about there's kind of two phases here. One, the unwinding of before, and then we get to the after. If the after has to include to create a regulatory framework, market structure legislation emanating from Congress, which we got in the last one, didn't ultimately cross the finish line. I would imagine it's going to look pretty different now that Republicans have full control. What timeline are you expecting there? If there's still all this kind of backward-looking work that needs to be done, when does that forward progress happen?
Well, I think there's a lot of momentum building in Congress. We just this week, gosh, that was only this week.
They all run together.
I know.
these
We had a
days.
Congressional Review Act resolution in the Senate that got 18 Democrats and 1 independent that joined. We have a same resolution voted on in the House next week. I think that is starting to build very bipartisan momentum. That undoes the work of the past. We're seeing work on stablecoin bills, new drafts introduced. We have markups and hearings next week. I think that will continue to build that momentum, and we could see that as early as this summer. And then I think it's very likely that we could get market structure done by the end of the year. I think that there are a lot of discussions going on. Especially between the House and the Senate. I have never seen so much collaboration at a staff level and on a member level between the House and the Senate. So I think they're serious about getting this done, and we're really excited at the Blockchain Association for this the unique moment we find ourselves in, and we're ready to be a partner as policymakers are exploring ideas.
Dance card's pretty full on Capitol Hill right now as we stare down the pipe of a potential government shutdown, this massive reconciliation project. They're talking about Trump tax cuts and so forth. What can Donald Trump say today? He's going to speak, well, he's scheduled to an hour and a half from now at the Crypto Summit to hasten and put some urgency underneath this effort on Capitol Hill.
Yeah, well, I mean, I think highlighting it as a priority is really sends a signal to Congress that this is something he wants to get done. I'm hopeful that he will speak to a bipartisan audience, because whatever regulatory framework gets put in place, we want it to be lasting. We don't want it to be something that changes every time there's a change in power. And so I'm hoping that he will speak to a bipartisan audience. And I think that, with his leadership and with the folks in the industry around the room being helpful in the process, I think we can get there. And so this is in the U.S. interest. I don't think innovation is something that is more Republican or more Democrat. And so I'm hoping he shows some leadership and tries to bring people together. I think that stands in contrast to some of the other issues and debates going on. And so I think it's nice to have something where everyone can be on the same team.
Well, it was great to have you here on our team for at least today. Thank you so much for joining us in studio.
Thanks for having me.
Kristen Smith, CEO of the Blockchain Association, with us on Bloomberg TV and radio. Thank you so much. Of course, a lot of the members of the Blockchain Association are at the White House right now as we speak. The gathering was slated to begin around 1:30 today. A whole host of CEOs there at the White House to plead their case. You know who's not going to be there, though? Former CEO, used to be the emissary to Washington, Sam Bankman-Fried. He's still looking for a pardon from President Trump. I wonder if we hear anything about that today. I wouldn't think so.
That would be a headline, and we're used to that around here. We'll be listening, of course, when Donald Trump speaks. 3 p.m. Eastern, they tell us. We'll let you know right here on the fastest show in politics. With Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. President Trump says he may implement reciprocal tariffs on Canadian lumber and dairy products as soon as today, threatening again to disrupt trade with a major American partner and reigniting a fight over two industries that have long been at the center of cross-border disputes. The Dow, the S&P, NASDAQ are all back in the green. Been that kind of a day. A lot of volatility. Stocks getting whipsawed. But right now, we're looking at an 18-point gain on this Jobs Friday on the S&P, up now by about 0.3%. Dow Industrials up 173, up 0.4%. NASDAQ up 50 for the NASDAQ Composite Index, a gain of 0.3%. The NASDAQ 100 Index up now by 0.3% as well. The Russell 2000 Index of small cap shares up by 0.2%. The key takeaway at this hour, stocks are back in the green. We've got the 10-year yielding 4.30%, the 2-year currently at 3.99%. Spot gold down 0.2%, $29.06 the ounce. West Texas Intermediate crude 67.03 up 1%. And Bitcoin, we've got Bitcoin right now down 1.2%. Bitcoin at 88,442 on Bitcoin. The Trump crypto rally fizzling after skepticism on that reserves plan. The NASDAQ 100 Index down 10.2% from its peak last month. Again, right now, the NASDAQ 100 Index is higher, up by roughly 0.3%. S&P higher by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues now, the Friday edition. What a week. Back we go to Washington. Once again, your hosts, here they are, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Watching Wall Street for us here as we cover politics in the nation's capital. Don't we say that every Friday? What a week. Yeah, we're doing it again. And thank you for meeting us here at the threshold of the weekend. Jobs Day showing some signs of softening. More people permanently out of work. Payrolls came in a bit light, 151,000. The estimate was for 160. Unemployment, 4.1%. We heard earlier today from one of the president's closest economic advisors, Kevin Hassett, director of the National Economic Council, on Bloomberg Surveillance, speaking with John Farrow. Here's what he said.
We're preparing you for news like today, the great jobs report. I think one of the things that you see, if you look at it, is exactly the objectives of the Trump administration, and the fact that even though we got a lot of work to do, we got to pass the tax cuts and get this deregulation train rolling, is that we're going to be reducing government employment and reducing government spending and increasing manufacturing employment. And as you can see in the jobs report today, you're already seeing a pivot in that direction. That's a huge one. And so last year, 111,000 manufacturing jobs were destroyed by the Biden administration's policies. And in this month alone, in February, we got 10,000 manufacturing jobs and 9,000 auto jobs. And as you know, those auto jobs are, here, they're going to be paid well, and they're here for a good long time. And that's really just sort of a down payment on the Trump policies that are going to skyrocket into a golden age as soon as we get the tax cuts passed.
So, Kevin, I hope you're right, but what I've heard over the last week or so regarding the economic data, when I spoke to the Commerce Secretary, Howard Lutnick, Secretary Lutnick said that this was Biden data over the last month, that this was not Trump data. So if it's good, is it Trump data? And if it's bad, is it Biden data? How does this work?
Let's go into the specifics. So what specifically has happened is President Trump has made a big effort, along with Elon Musk, to find workers that are unproductive and to get them off the payrolls. And so we see government spending going down. So is that a Trump effect? Yes. Manufacturing and job creation in the auto sector is happening because people are anxious about future tariffs and they're already onshoring production. Is that a Trump effect? Yes. But it's true that we've inherited a lot of terrible Biden policies. They want to, get expensing gone and so on, and that's bad for capital formation. We're going to fix that. So we haven't fixed everything, but already the things that we're fixing, you can see in the data, and I think it's really quite remarkable.
Well, let's talk about the manufacturing data as well. We had that over the past few weeks. You're familiar with ISM manufacturing. You're familiar, I'm sure, with the respondents in the surveys, and this is what they had to say. The uncertainty about tariffs keeps us cautious on spending. Customers are pausing on new orders as a result of uncertainty regarding tariffs. The incoming tariffs are causing our products to increase in price. Are you hearing the same message from businesses? Are you hearing something different?
What I'm hearing is a massive amount of onshoring. We've got more than, $1.5 trillion in commitments for new factories, and you're already seeing it in the auto data. I mean, think about it, how hard it is to create a job in the auto sector. To have 10,000 in a month means that the attempt to onshore activity, to make it so that the jobs are created here and the money isn't just, frittered away to foreign countries, is exactly what President Trump's objective is, and it's right there in the data. Now, I know that it's 1 month and the data can blip around, but I was really, really stunned. And the other thing I was stunned about, which I know you guys follow this a lot. In fact, Anna Wong at Bloomberg is one of the best young economists I know at looking at the numbers, is that it was a really bad flu season. And so when I adjusted for the flu, what I thought this number was going to be, it was way below the number that we got. And so I was very positively surprised by this number once you adjust for flu. And then you see that all these jobs that are created in manufacturing. And finally, if you go back and look at the Biden job record, mindful of the fact that they revised it down 1 million jobs last year, don't forget that a lot of the job creation was government workers. It was government workers. About a quarter of the job creation over the last 2 years was an increase in government workers. And so if you take those out and then still have a strong jobs number, that's a great economic outcome.
Kevin Hassett at the White House earlier today on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines in Washington. Watching Wall Street off the jobs news didn't start well, Kaylee, but we have turned higher after the chair of the Fed spoke earlier. Jay Powell seemed to soothe the markets into changing course here, though Bitcoin is still lower on this crypto summit day.
Yeah, we're expecting to hear from President Trump at the crypto summit at 3 p.m. Eastern. At least that's when it's scheduled, though he's also scheduled to sign executive orders just half an hour before that at 2:30 p.m. Eastern time. And we already actually heard from him in the Oval Office today as he spoke to reporters, suggesting one of those executive orders he will be signing will restrict eligibility for government-run student loan forgiveness for individuals who work for nonprofits that clash with the administration's immigration policies. This is not necessarily, though, the education-oriented executive order we thought we might be getting from the president this week, as there had been reporting that he could be signing an EO to dismantle the Department of Education. The White House has suggested, though, that at least on timing, that is fake news for now.
Yeah, that was the tweet or the X post, I guess, from the press secretary yesterday. Some folks do, again, to your point, though, think it's just a matter of when that happens. The president's been pretty clear about his intentions.
Yeah, including the new secretary, Linda McMahon, saying that her job basically is to get herself out of a job.
Turn the lights out.
Eventually. But we want to go to someone who used to hold that job now, who I'm pleased to say is joining us here on Bloomberg TV and radio, former Education Secretary Margaret Spellings during the Bush administration, who is now president and CEO of the Bipartisan Policy Center. Madam Secretary, thank you so much for your time. If we could just begin with what has been a very clear effort on the part of Donald Trump to work toward getting rid of the Department of Education. We've already seen Linda McMahon, for example, offering buyouts to employees, some of which have been accepted. What would the immediate impact be, even if this is a slow unraveling, on education in America?
Well, and I'm glad this is a segment that comes right after discussion of jobs and the jobs numbers, because we can't talk about jobs and good jobs without getting quickly to education and the quality of the American worker. And that's what we're focused on at the Bipartisan Policy Center. And, what I'm hearing is, yes, there's a discussion around how federal programs should be deployed, but not a question about many of those federal programs. Obviously, there's still strong support for the title programs on the K-12 side that support low-income and special ed students. There's still support for financial aid for higher ed students, although we ought to be smarter about how we do that in connecting it to the needs of the workforce. But it's basically, how are we going to organize and oversee the federal role? And so are there efficiencies to be gained? Heck, yes. And I'm looking forward to working with Secretary McMahon and her team to talk about the best ways to do that. It has grown a good bit over time, the federal workforce, as has been said. And how are we smarter about how to do that?
We heard from Donald Trump on this, Secretary, and we've heard him speak a couple of times. I'd like to just go back, if we could, to the 4th of February. This is Donald Trump in the Oval Office when he was asked about his intentions here to basically eliminate the Department of Education. Linda McMahon had not yet been confirmed. Here's what that exchange sounded like.
I told Linda, I hope you do a great job and put yourself out of a job. I want her to put herself out of a job. We're ranked at the bottom of the list. We're ranked very badly. And what I want to do is let the states run schools. I believe strongly in school choice, but in addition to that, I want the states to run schools. And I want Linda to put herself out of a job.
Put herself out of a job, Margaret Spellings. Does that sound like somebody you can work with?
Well, you know, states do run schools. Most of the money obviously comes from states and local school districts. I think Americans and President Trump obviously are rightly frustrated with the quality of education in America today. And so what we need to decide is, you know, where is the role around accountability and transparency for achievement, for federal funding, for the investments we do make, and the outcomes that states and local school districts are getting. And we can certainly do a better job of doing that. There's been a lot of discussion around authority for governors to be more involved in some of those funding decisions about the use of federal aid. But sure, I mean, are there parts of the Department of Education that might go elsewhere, might be managed better elsewhere? Possibly. You know, does it make a lot of sense for school districts and universities to interface with a multitude of federal agencies or just one? I mean, I think she is an experienced businesswoman. She has experience in the federal government, and I think she's going to do, President Trump said yesterday, a good scalpel job on looking at what can be approved over there. We don't want to ship fat programs just around the federal government. We need to have them run efficiently wherever they end up. And obviously, the Congress is going to have the last word on much of this.
Well, that's exactly where I wanted to go next. We actually spoke with a Congressman, Ryan McKenzie, who sits on the Education Committee yesterday, who told us this has to go through Congress. This can't be up to the executive branch alone. Whether it is drastic changes potentially to the Department of Education or other agencies that we have seen the Department of Government Efficiency trying to pursue an end to, USAID, the CFPB, for example, do you see congressional appetite to actually partake in that activity, or would you anticipate, and I'm asking you to put that bipartisan policy center hat on right now, that there might be some pushback?
Oh, I think there'll absolutely be pushback on this and everything else. I mean, that can describe anything. But yeah, absolutely. The Congress is going to have their say over this, and I think Secretary McMahon is eager to engage with them. That's certainly what she told them during her confirmation hearing, and do that in a smart way. You know, my hope is that we have to keep the main thing. And the main thing that we are all concerned about is the quality of reading and math education in our country. We got the report card a few weeks ago, and it's shocking. It's you know, something we all ought to be up in arms about. And so rather than talk about, you know, the movement of the deck chairs as the dominant matter, we need to be talking about how we best teach children to read and do math, so that they're prepared to enter the workforce and be successful.
Secretary, you run the Bipartisan Policy Center, bipartisan being the key word in this political climate, this partisan climate that we're living in right now in Washington, D.C. Is this mission impossible?
No, it is not. And there's lots of bipartisan energy that's going on and will go on and must go on before deals are done at the end of the day. We, as you know, have very close margins in the House and the Senate. You know, it'll take 60 votes to abolish the Department of Education. I don't necessarily see that happening. And so being smart about giving a plan about how to run the thing better. Nobody that I engage with is in support of waste, fraud, and abuse. So, yeah, you bet. We're not going to extend the tax cuts. We're not going to raise the debt ceiling. We're not going to keep the government open, you know, over time without bipartisan support for those things.
Well, it's not just a question of the government being open over time. It's a question of if the government's going to stay open beyond a week from today, when the deadline is for funding to come through Congress. Are you ultimately expecting that there will be bipartisanship in that effort? Because right now, Democrats are signaling, at least in the House, they are not willing at this time to participate in that effort.
And we may well have a shutdown. I certainly wouldn't want to make any wagers about that either way. What I'm saying is, over the long haul, these big policies of closing the Department of Education or extending the tax cuts will ultimately come down to bipartisan agreements.
Secretary, it's great to have you on. Margaret Spellings, President, CEO, Bipartisan Policy Center. We appreciate the conversation. Come back and talk to us again. Breaking on the terminal here. Intense work today with Donald Trump's team at various levels. That's President Zelensky speaking. Same day we learned that Vladimir Putin is open to a truce in Ukraine. This could be interesting to watch unfold.
Yeah, our colleagues at Bloomberg reporting that news earlier today. That discussed in Saudi Arabia last month between U.S. and Russian officials was this suggestion on the part of Russia that a temporary truce could be something they agree with if they're satisfied with progress toward peace negotiations, including what actually a peacekeeping force would look like. And of course, this comes ahead of Ukraine and U.S. officials meeting in Saudi Arabia next week. We'll have more on that in the late edition of Balance of Power.
Yeah, we'll meet you back here at 5 p.m. Eastern Time. The president's set to speak about an hour from now. We'll keep ears on that for you right here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, a very good Friday afternoon, everybody. Live on television, radio, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. It is Friday, March 7th. Carol Masser, Tim Stenivek, and man, so much for investors to digest on this Friday.
Yeah, the market really trying to figure out which way to move higher, Carol Masser. At one point today, the NASDAQ was in correction territory, the NASDAQ 100. The S&P 500 was down as much as 1.3% earlier in the session, and today as high as 0.6%.
Yeah, it's been kind of amazing. Let's not even talk about the weekly numbers. We'll get into it a little bit later on because it's been a tough week for stocks, but we are pretty much at our highs of the session. All right, we're going to get more on the trade in just a moment. We are going to talk about that monthly jobs report and whether the Fed's dual mandate has become a little bit more complicated. Jay Powell speaking to where we are in the economy. You're going to hear from him in just a moment.
And speaking of complicated, the implications of President Trump's on again, off again tariff strategy. I think we're seeing that play out in the equity markets.
We are,
this
right?
week, yeah.
Where are we? Where are we? Hey, also, speaking of complicated, companies have to navigate all of this as well. onsemi's Chief Financial Officer, Thad Trent, has some thoughts on tariffs. He has some thoughts, too, on the resulting business uncertainty. He's also had some big news this week. They made public a deal for another company. Pretty big deal. So we're going to talk about all of that.
And also, we're going to talk about Peter Thiel's deep ties to the Trump administration. All that and more coming up over the next hour right here on Bloomberg Business Week. First, though, more on the trade in today's top business stories. Here he is, Charlie Pellet.
Thank you very much. Indeed, we are looking at stocks that are moving higher. As Carol mentioned, lots of moving parts today. And yes, we got you covered. Do want to begin with some headlines involving Ukraine. Vladimir Zelensky says there was intense work today with Trump's team at various levels. Those comments coming on talks with the Trump team in a post on X. Right to the numbers here, because we got fast-moving markets. Jobs Friday, Powell speaking, stocks higher. S&P right now up 26. That is a gain of just about 0.5%. Dow Industrial is up 213, up now by 0.5. NASDAQ up 78 for the NASDAQ Composite Index, up now by 0.5%. The 10-year 4.31%, the 2-year 4.01%. Spot gold down $4 the ounce, down 0.2%. West Texas Intermediate crude up now by 1%. WTI 67.07 on WTI. Bitcoin, a day filled with headlines, 88,810, but Bitcoin is down now by 1.1%. So bottom line here, the Dow, the S&P, NASDAQ, all moving higher. The rout in NVIDIA shares now reaching epic proportions. $1 trillion in market value has been wiped out in just 2 months. And Tesla today erased its $700 billion post-election advance. Tesla is on track for another weekly loss. Recapping, S&P up by 0.5% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, folks, thanks to Charlie. You're up to date on your top business stories and the trade on this Friday. Well, just minutes after a market sell-off that drove the S&P 500 down over 1%, we did see the gauge wipe out its losses as Fed Chair Jay Powell said the economy is doing just fine, while reiterating that officials remain in no rush to cut rates. Chair Powell speaking at an event hosted here in New York City by the University of Chicago Booth School of Business.
While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity.
As Fed Chair Jay Powell earlier today, it does come on top of a U.S. job growth that steadied last month while the unemployment rate rose. A mixed snapshot of a job market hanging in the balance of quickly changing government policy. On that, White House National Economic Council Director Kevin Hassett says he was very impressed with the February report and the actions the administration has yet to take. He spoke earlier on Bloomberg Surveillance to Bloomberg's Jonathan Farrow.
The fact that even though we got a lot of work to do, we got to pass the tax cuts and get this deregulation train rolling, is that we're going to be reducing government employment and reducing government spending and increasing manufacturing employment. And as you can see in the jobs report today, you're already seeing a pivot in that direction.
All right, that, of course, was White House National Economic Council Director Kevin Hassett earlier on Bloomberg. So let's get to it. With us, Bloomberg News economics editor Molly Smith right here in our New York studio, and Bloomberg International economics and policy correspondent Michael McKee at the Powell event in Midtown Manhattan. Yes, we need to talk jobs, very important, but when Jay Powell speaks and moves the U.S. market, yeah, folks, we got to start there. So let's head on out to Mike McKee. You were in the room where it all happened, where the Fed chair spoke. Mike, what might investors feel more confident about when it comes to the U.S. economy, maybe monetary policy, off of Fed Chair Jay Powell's comments?
Oh, you know, Carol, a lot of people are scratching their heads about that. What exactly did he say that turned the markets around? And my guess is this, it was sort of the overall impression that he gave that despite the chaos at the White House, the Fed is on the job, the Fed is monitoring what's going on and will take appropriate actions. He did go a little farther than he and other Fed officials have gone in recent weeks on tariffs, saying that, yes, theory tells you that tariffs would be adding to inflation, and the Fed will keep a close eye on that. But he didn't express concern or worry that this is going to take on the economy. He stuck to the Fed's viewpoint that we don't know enough right now to even comment. So it's probably more the vibe, the attitude, the calmness that he projected, and backed up by a reasonable jobs report today.
Well, let's get to that jobs report. I want to bring in Molly Smith. She's a Bloomberg News economics editor. The analysis seems to be that this was a mixed report. Was it mixed?
It was in some ways. I mean, the thing is what's always so hard when we're doing this in real time at 8:30 in the morning and have to put out a story in 2 or 3 minutes and decide what's the tone here, is that there are 2 surveys to consider, and a lot of times they can say different things. So on the payrolls survey, when we got that 151,000 advance in payrolls, okay, yeah, that's a pretty good number. That's, I mean, that was personally higher than my estimate. Thought that I'm a qualified economist, but
feather in the cap for Molly Smith.
I was definitely more bearish
Well
today. I thought that the median estimate around 160 was personally very optimistic, but this was pretty in line with that. And then we get the survey of households, which is decidedly more negative, which really has been the trend in recent months. That's where the unemployment rate comes from, and that moved higher. The household survey also has its own measure of employment, which was decidedly lower. So that's where you get the mixed picture. But I think on the balance, this was kind of taken as this is setting us up for like a weak backdrop as the full scale of Trump policies have yet to take effect.
Mike, I want to come back to you on this. You know, based on what Jay Powell said and what he said about the economy, and then kind of throw into that the monthly jobs report that we got this morning and a lot of reads on the labor market this morning. How are you thinking about the economy right now and what the data points are showing, and then what the Fed chair's assessment is telling us?
Well, I think what you've got is an economy that is reasonably solid, but I think Treasury Secretary Bessent said it the other day, fragile underneath, and that's because confidence isn't there. This jobs report today was reasonably good news, but we haven't seen the impact of the federal layoffs yet. So what is that going to be, and how is that going to impact what we see next month? And then how do people react to that? That's the real question here is, do we see people start to pull back spending because they're worried about their jobs? Do we see companies start to pull back? Do prices start to go up, even if it's just the one-time move that the president is talking about? If prices go up, then how do people react to that? Because they're now used to the idea of prices going up, as Jay Powell pointed out. Recessions are a matter of confidence, and so the fragile confidence underneath this is what people are concerned about, and I think that's what the Fed's watching.
Mike, one of the things that he said really got my interest. He said sentiment is not a good spending predictor in recent years. Essentially, is he saying we should take sentiment figures and numbers around that with a grain of salt, because don't take what we say, take what we do?
Well, that is the old Alan Greenspan line, and that's correct. The consumer confidence numbers from the Conference Board, the sentiment numbers from the University of Michigan, they don't correlate with spending. They're sort of concurrent indicators, and they don't tell you what people are going to do in the future. The utility for the Fed is 2 things. One is the feelings about inflation. What are people's expectations? Because they do worry that expectations drive inflation. If people think inflation's going to go up, then they can push it up higher by demanding higher compensation. And also, if it's an indication that maybe people are losing some confidence in the overall economy, doesn't necessarily mean they stop spending, but it does give you something to look at, something that the Fed wants to monitor.
Molly, you know, we did monitor this morning kind of all of the aspects of the jobs report. There are, you know, the unemployment rate, obviously, change in non-farm payrolls, the labor force participation, underemployment. You know, when you start to dig down and you also get into where there was job creation, where there wasn't, give us some more of the specificity.
Yeah, I mean, we definitely started to see maybe a little bit of the impact of the federal layoffs, that those payrolls for federal workers were down this month. And the thing is, it was only down by about 10,000. So that's, I mean, which is kind of, I think, was in line with what economists were estimating, because there's a certain survey week that we have to keep in mind, and most of the firings took place after that reference period. So a lot of economists are saying that more of the impact is going to show up in next month's report, and maybe even the subsequent ones once those deferred resignations maybe start popping up as well. So that was to be expected. Saw manufacturing payrolls pick up, and that's where Kevin Hassett was speaking afterwards, saying that this is exactly the Trump policies in effect. We want to see federal payrolls lower. We want to see manufacturing come up. Something that you mentioned as well, Carol, on the underemployment rate. We don't usually talk about this a whole lot, but this is a broader measure of employment that also reflects what we call marginalized workers, or people who are less attached to the labor force, who a lot of them who are working part-time for economic reasons. That number really jumped in February, so that's certainly not a good sign. Also, this number of multiple job holders set another record. So that can be taken in two different ways. You know, there are times when multiple job holders, that can reflect there are just a lot of jobs open. And I did a story on that a couple years ago when job openings were up near 12 million and people were just taking advantage of flexible work arrangements. And there was nothing really to worry about then. But now it's a little bit more concerning when people are feeling more stretched.
Right. You do wonder, if they, you know, are they taking also part-time, or, you know, because they have to and they have no other choice.
Exactly.
Just to put a pin in it, Mike McKee, you know, big week, tariffs, economic data points, the labor market, trying to kind of read the tea leaves here. Your final thoughts as we kind of close out this week.
Well, it's interesting because there's a lot of Fed officials here at this meeting, and of course, pretty much all of Wall Street's economic workforce is here, and everybody has the same attitude that this is just exhausting, all of the back and forth and where do we go from here kind of thing. Next week, at least, the Fed is off the hook. We are in the quiet period. They're not going to be talking, but we do have the inflation numbers and the retail sales numbers coming up. So there are things that in the economy that could move the markets, but it's really going to be, because nobody expects the Fed to do anything this month, it's really going to be about what the president does. And as he's shown us, he never stops. While Jay Powell was talking, we saw the headlines cross about maybe I'll tariff Canada today.
Yeah.
And everybody just kind of shakes their heads because they all have to figure out what this means, and the goalposts keep moving minute by minute.
Yeah, we're going to talk a little bit later on about the on-again, off-again tariff policy that comes from the White House. Guys, thank you so much. Have a great weekend. Of course, our Mike McKee out there at the Chair Powell event in Midtown Manhattan. Mike is Bloomberg International Economics and Policy Correspondent, and our thanks to Molly Smith, who has joined us a couple times, I think, this week, talking about the economy. She is news economics editor here at Bloomberg. We're going to stay on jobs, though, for a moment.
Yeah, let's get another perspective on today's U.S. employment scene. Back with us is Jane Oates. She's Senior Policy Advisor at Working Nation. It's a media company that focuses on the future of work. Also, former Assistant Secretary of Employment and Training in the Obama administration. Jane, good to see you this afternoon. How would you characterize the job market right now?
I would say it's as uncertain as the policy area. You know, people are really nervous. You saw for the last several months in the JOLTS report that people aren't quitting. They're not leaving their job. And quite frankly, employers aren't laying off. So they're holding on. Even those employers that aren't adding jobs are really interested in retaining their talent.
So, you know, it's interesting. I felt like it was a measured discussion we had, or a measured view in terms of the jobs market right now. So if you had to pick a word or two words to describe the U.S. labor market, you know, how would you do it? You know, a jump, because what we've seen is a jump in those working part-time for economic reasons up to an almost 4-year high. Like we went through some of these metrics.
Multiple jobs,
fewer workers on government payrolls. You and your team speak daily with all of those global leaders or leaders here in the United States. Is it becoming where companies are less likely to hire and maybe more likely to fire in the future?
Well, I think, the one thing that business wants, whether you're talking about regulation, whether you're talking about tariffs, whether you're talking about supply chain, is some kind of certainty. Business people are agnostic, I think, when it comes to what happens. They will deal with whatever happens. Just tell them what it is. So these past 2 weeks have been really destabilizing for business, particularly smaller employers who are reliant on, subcontracting or contracting with larger folks. They're not sure what to do. Should they, grab everything they can from Canada before the tariffs hit, or should they just relax? But one thing they are definitely not doing is hiring. They're not creating new jobs. And, I think if we see, in your previous segment, you were talking about consumer confidence. If consumers decide they want to stop spending, they've really been the engine of this economy for the last 8 months. In retail and hospitality, if they stop spending, I think we're going to see drastic numbers, along with the trickle-down effect of the federal clawbacks.
You did work in the Obama administration. I mentioned your former Assistant Secretary of Employment and Training in the Obama administration. So curious about your view on the employment picture in Washington, D.C. as Elon Musk and others do whatever they can do in some cases to decrease the number of people working for the federal government. How does that affect the economy in your view?
Oh, it's really going to have a disastrous effect. I mean, no one is for waste or fraud or abuse of taxpayer money. And those reductions, under President Reagan, under President Clinton, all those reduction attempts happened, but they were done surgically. They weren't done as Mr. Musk came out with a chainsaw. Because all of these things have an impact. I'll give you just a quick example. There are lots of people outside of the defense industry who are government contractors, the IBMs of the world, the Deloittes, the KPMGs. Well, if their contracts are cut, of course they're going to cut staff. And that's not going to be inside the DC area. It's going to be all across the country. So we're going to start feeling that. And as your previous guest said, the bottom line is one of the reports, the establishment report ended February 5th. And the household report closed February 12th. So we haven't begun to see the impact of these cuts.
Speaking of impacts, there's a lot of things coming at the workforce potentially. You do focus, you and your organization, on the future of work, predictions about the future of work and the impact of artificial intelligence. What can you say with certainty about what will be the impact of AI longer term?
Yeah, I think like everybody else, Working Nation is kind of a listen and learn, in a listen and learn mode. Our CEO was just yesterday speaking at a conference in San Jose, California, not only talking about workforce issues, but listening to what people are saying. I think there's, we saw the announcement come out this morning about McDonald's going to use AI for different aspects of their work. Some that looks like it's going to make it safer and better for people. Others, like using AI for, drive-through windows, may take away jobs. So, I'm hopeful that people will do responsible implementation of AI, but it's here.
Yeah.
We all use AI as it is. It's not like something on the horizon. But like with the implementation of technology, let's do it in a sensible way.
Jane Oates, thank you so much. Have a good weekend. Senior Policy Advisor at Working Nation. Coming up next, our weekly view from the C-suite. onsemi's CFO joining us to talk jobs, tariffs, and a big M&A deal this week. That's coming up on Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are on track for a down week right now, roughly lower on the week by about 3.3%. But a roller coaster week for U.S. equities is ending on the same note. We have got stocks moving higher now. S&P up by about 0.6%. Volatile session, big swings earlier in the day. Right now up 33 points with the S&P at 57.72. The Dow up 248, now up by about 0.6%. NASDAQ Composite Index is gaining 125 points now, up 0.7%. Stocks have been whipsawing, though, as traders try to make sense of a myriad of headlines around the economy, a trade war, and geopolitical developments. The 10-year, 4.32%. The 2-year at 4.01%. Gold down $4 the ounce, $29.07. That is a drop of 0.1%. West Texas Intermediate crude oil trading higher now. WTI up 1.5%, 67.35 a barrel on WTI. Bitcoin down now by 1.5%, 88,467 on Bitcoin. Briefly after earnings, shares of Broadcom, they reported after the bell last night, surging now by 7.9%. But Hewlett-Packard Enterprise, which also reported last night, that stock plunging by 13.6%. Again, recapping, S&P up 39, higher now by 0.7%. The 10-year, 4.32%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this week, the chip company ON Semiconductor made its pursuit of Allegro Microsystems public, disclosing an unsolicited bid valuing the company at $6.9 billion, including debt. Possibility of a deal is something that Bloomberg had previously reported out. This follows news last month that the company plans to cut about 2,400 jobs this year as part of a restructuring plan, and also take some related charges of about $50 to $60 million, mostly this year, Tim.
Here to talk about all of this, tariffs and the macro environment, is the Chief Financial Officer of ON Semiconductor, Thad Trent, along with Bloomberg News Senior Editor Nina Trentman. That is featured in the recent Bloomberg CFO Briefing newsletter. It can be found online at bloomberg.com/CFO Briefing. Also, sign up to get it there. A new one does come out on Sunday. Nina joins us here in the studio. Thad joins us from Phoenix. Thad, we want to start with you. Charlie Pellet just talking about the busy week that we have had, or fair to say busy year, and we're only a couple months in. Top of mind, I think, today for everybody is the macro, the jobs market, tariffs. How would you describe the U.S. economy, the global economy, and the macro environment right now?
Yeah, first of all, thanks for having me on. Look, in terms of the tariffs, there's definitely an impact that's happening out there right now. I would say what we're seeing from our perspective, and it's really been happening for the last 3 or 4 months, is a pause. Customers are really slowing down, trying to figure out what to do, what's the impact on the tariffs, and how they're going to adjust their supply chain to adjust to these tariffs. Right now, what's happening with the uncertainty is that pause, and customers just saying, we're going to run kind of hand to mouth. We're going to be very, very cautious in the short term until we get clarity. So I think clarity is really what we need for this to get kind of back to a growth environment again, given that just the uncertainty around the globe. But what we're hearing from our customers is they're looking for alternatives. And we're in a spot at ON Semi where we can offer alternatives to our customers. We have a very large manufacturing footprint, in the United States. And we can offer our customers alternatives based on where they're located, where their manufacturing is, and hopefully help them navigate through the tariffs. But to answer your question, it's mostly a pause right now.
It's a pause. Love that word to describe it. You said tariffs definitely having an impact, this pause, customers really slowing down. I'm looking at some of your biggest customers, the supply chain function on the Bloomberg, WT Microelectronics, Arrow Electronics, Avnet, Hyundai Motor, Tesla, BYD. You play a lot, Volkswagen, you play a lot into the automotive sector, but also the industrial space. All of them pausing, all of them slowing down, or is it largely the automotive sector?
Yeah, so, over 80% of our business is automotive and industrial. So that's where we focus. What we're seeing on both sides is a slowing in auto and industrial. If you think about it, those customer bases have really complex manufacturing and complex supply chains. And the pause is happening across the board and across all geos right now. We're seeing pockets of shoots of kind of green shoots that are looking good. But generally, I would say people are looking for certainty right now in terms of the geopolitical situation and where the dust is going to land on the tariffs.
Thad, how does this impact your current situation at the company? Carol mentioned you're restructuring, you're making job cuts, you're making changes. Sort of, how does this affect you?
Yeah, so look, for us directly, we don't think there's a huge impact or a material impact from the tariffs directly in terms of our business, but our end customers are being impacted by the tariffs, right? So the big concern is, what does end demand do and what does the macro do as a result of these tariffs and the geopolitical situation? For us, there is a slowdown in the industry. Autos are soft right now. So, you know, as you mentioned, last week we announced a restructuring. We're looking at this as not just a cost reduction, but a restructuring. How do we take cost out of the company that's permanent? So we've been going through a transformation here at onsemi for a number of years here, and a lot of this is structural nature, where when we think about the market recovering, these are cost savings that are with us forever.
Thad, you said autos are slowing down. Is that because of tariff concerns and automaker problems and issues, or is it because of the consumer, or both?
Oh, it's a consumer. It's more consumer. Now, I would say what's been happening over time is consumer-based, right? I think the demand for autos has been coming down for a period of time. Now, the short term, what I've been talking about over the last couple months, has definitely been tariff-based, where if you're an automaker and you're importing from Mexico or Canada, you're seriously considering what that supply chain looks like, what that manufacturing footprint looks like, and that is causing a pause right now with those customers.
Hey, want to get your thoughts on everything that happened this week when it came to the chip space. You've got manufacturing sites around the globe. You mentioned what you do here in the U.S. The investments that are being announced in the semi area, TSMC announcing this week to spend an additional $100 billion in U.S. plants to boost semiconductor manufacturing in the U.S. How is that going to impact you? Will it impact you directly? Will it impact you indirectly?
Look, it's not going to have a direct impact for us because we manufacture about 65% of our products in-house. So we have a large manufacturing footprint ourselves. So a TSMC coming to the United States isn't going to impact us directly, but it's really good for the industry. The more manufacturing we can get into the United States is going to be great for obvious reasons, national security. So I think for the industry, the supply chain, given what's going on for our customers, I think it's all good. Even though it may not impact us directly, our customers buy other products from our peers that have manufacturing in TSMC. So the more that we can have a diverse supply chain is going to be great for the industry. So I think these investments are great overall for our customers and for the semiconductor industry.
Should we expect more investments from you in the U.S.? I know that you're investing more in the Czech Republic, where you already have a site and you're building that out. But what does your CapEx strategy entail with regards to U.S. investments?
Yeah, we've been making big investments over the last 3 years, I would say, and that's in manufacturing capacity. A lot of that investment phase is behind us at this point. We've made big investments in the United States. We acquired a fab in East Fishkill, New York. We have a large manufacturing site in New Hampshire. So we've been making big investments over the last several years. You brought up the Czech Republic. When we think about investments in our footprint, it's what we call brownfield investments. It's not a greenfield investment. That becomes a capital light investment for us. So it saves about 40% capital when we think about a brownfield investment, investing in a site where we already have a location, already have the infrastructure. So in the Czech Republic, we have a large site there that we are expanding. We are going to continue to invest in that site over time. But that investment is a lower capital, and it's also faster time to market. So we can get to market 2 years faster with a brownfield investment than a greenfield investment.
All right, so you've done a lot of investments around the world, and in terms of your manufacturing sites. You also spend money sometimes when it comes to a deal, and you did that this week. So very timely. I know you might be limited in what you can talk about, but that takeover offer for Allegro Microsystem, unsolicited bid, values the company about $6.9 billion. That includes debt. Offers are not often made public, sometimes, though, done to kind of put some pressure on shareholders on the target. What can you tell us about this deal moving any closer to being a done deal?
Yeah, look, we put out a press release on Wednesday that I think details really our sequence of events that have gotten us to this point. Let me start with the strategic rationale of why this is compelling for onsemi. So at onsemi, we focus on intelligent power, intelligent sensing, as we talked about, for auto, industrial, and the AI data center. Allegro Microsystems has got a great portfolio of sensing products that sell into automotive and industrial. Very, very consistent market. And we believe with our scale and our scope, we can take that product broader and create innovative products for our customers. Both companies have a culture of innovation, so I think we're going to be combining companies that have common themes of innovation, and it allows us to bring more value to our customers. That's really the strategic value of this. In terms of what we're wanting to happen here is we're wanting to get some meaningful engagement with their board, hoping to get some dialogue. At this point, we haven't gotten that. Thus, we went public with our offer to say we're here, and we're hoping that we get some engagement from this point forward.
Yeah, it's interesting that you're pursuing this deal at a time when deal making was supposed to pick up, but we haven't really seen it. And many companies are saying, well, the current environment is just so uncertain. So talk to us about how the company came to this conclusion that now is actually a good time.
Yeah, look, when you think about a strategic deal for us, it's got to click a few boxes, right? I mean, you got to have the strategic nature, the rationale in terms of what we can bring to our customers. And then you have to have the financial side of things. So, we think about accretive deals, how quickly we can get to accretion and the shareholder value that we can create over time. The element that you have to take into consideration is the regulatory environment, and that is the unknown right now. I don't think the regulatory environment has really changed much, from administration to administration. So when you think about this, the hurdle is higher when you think about you're going to go to bat for something like this, but you have to have conviction that it's going to make sense and that you can get through that regulatory environment. When we look at it, we don't compete head-to-head on any of those products, and we've analyzed everything that we can see publicly, and we don't believe there's going to be a barrier. It may take some time, but we believe we can get this one across the line.
Thad, if you cannot get this one across the line, if you have to walk away or if the deal falls through or if it doesn't work out for some reason, who do you pursue next?
Well, look, that's hard to say, right? This one has a lot of strategic value to us. We're committed to the proposal that we have on the table. We're hoping to get that board and management team engaged and get in a room and talk about how we can get a combination together.
Could the price go up? And are you willing to raise the price if necessary to get the deal across the finish line?
Look, that's to be determined. At this point, everything that we've been able to look at is based on publicly available information. We want to get together with that management team, understand the true value, and then we'll make determinations at that point. Look, we have a very compelling offer. It's a 57% premium to the unaffected price.
It is indeed. It is indeed. Listen, thank you so much. Covered so much ground and really great to get a window into your business right now, especially in this environment where there's a lot coming at CFOs, no doubt about it. Thad, thank you so much. Thad Trent, he's Chief Financial Officer of onsemi, joining us from Phoenix, Arizona. And our thanks to our own Nina Trentman, Senior Editor at Bloomberg News, joining us right here in our New York studio. Thad, we should point out, conversation that Nina had with Thad. It's in the CFO newsletter.
Bloomberg.com/CFO-briefing to sign up for that. Hey, the stock market looking a little better than it did earlier today. We're seeing green across the screen with the S&P 500 up 0.6% and the NASDAQ up 0.8%.
Up next, President Trump's on-again, off-again tariff strategy. The only certainty, safe to say, confusion. We talk about it next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story and a headline right off the Bloomberg Professional Service. The U.S. set to order more companies to stop operating in Venezuela. Developing story at this hour. Again, repeating the headline, the U.S. government set to order more companies to stop operating in Venezuela. We've got the S&P 500 index trading very close to session highs now at 57.76, up 38, up by 0.7%. Lots of moving parts today. Tariffs, it is Jobs Friday. We heard from Jay Powell, and a roller coaster week for markets is ending with stocks higher, at least today. On the week, though, will definitely be a down week. Right to the numbers, S&P up 37, up 0.7%. Dow Industrials up 266, up now by 0.6%. And we've got NASDAQ up 148. The NASDAQ Composite Index up now by 0.8%. The 10-year 4.32%, with a 2-year currently yielding 4.01%. Gold, little change now, down $3 the ounce, down 0.1%, 29.07. West Texas Intermediate crude up 1.2%, 67.18. Bitcoin, lots of headlines there today. Bitcoin down 1.9%, just above 88,000 at 88,100. Gap shares are soaring after earnings. Gap right now trading higher, 16.4%. The new ticker, by the way, GAP Gap, switching from GPS. Gap jumping after quarterly sales showed that CEO Richard Dixon's turnaround playbook is working. Another retailer out with earnings, though, Costco. That stock after earnings down now by 6.5%. Recapping on this Friday, Jobs Friday, S&P up 38, up 0.7%. The 10-year right now 4.32%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you basically need a whiteboard to keep track of President Donald Trump's frenzy.
I think there's somebody at the State of the Union, that joint address to Congress, that some people had whiteboards.
You kind of do, though, right?
Yeah.
I mean, it's been a little tricky, and we say this completely honest because it's just a lot of headlines coming at us. They continue a little bit today. It has been marked by reversals and faulty rollouts, baffling U.S. trading partners and businesses while raising questions about the aims of the president's signature policy. As we just really heard, we just had a conversation with onsemi's chief financial officer, talked about his customers, how business has been kind of on a pause and slowed down because of his customers' concerns about the tariff outlook. That is definitely a factor.
So here with more on the back and forth, one of our reporters that is keeping track of it all, Bloomberg News senior reporter Jennifer Deloe. She joins us from Washington, D.C. Jen, what is the rhyme or reason here? What is the strategy, if we can call it a strategy? Is this four-dimensional chess and I'm just not seeing it?
It depends on who you ask. I mean, obviously, the president has promised tariffs to achieve, a lot of his really ambitious economic goals. He wants to balance trade. He wants to raise trillions in revenue. He also clearly wants to use tariffs as a threat of them to secure, reductions in the tide of undocumented immigrants and fentanyl into the U.S. So he has all these big goals, and he has a lot of tariffs to try to achieve them. Over the last 6 weeks, we've really seen this frenzied rollout of tariffs. Some of this is happening very much in real time. Changes by the conversation the president is having with reporters or his cabinet secretaries are doing with, the interviews that they're doing. It's been very fluid. I will say that, some of his top advisors say, look, this is strategic. They say, it is an orderly rollout. And what you're saying, Kevin Hassett said it this morning in an interview, that this is an orderly process. And what you're actually seeing as fluctuations just reflect success at the negotiating table. Obviously, there is some of that. But there is, there have undeniably been instances where they've had to course correct after some of these pronouncements in ways that I think even many of Trump's, loyal supporters are worried or sometimes expressing concern about.
I think some would debate whether or not it's orderly. Having said that, you can tell it's top of mind because tariffs have certainly dominated, Jen, the headlines over the last week or so, or several weeks. Having said that, just writing my note to myself, are tariffs a tool and a means to a different end? Or does Donald Trump really, really like tariffs? And this is truly a policy, folks, and this is to investors and markets that are going to stick around for a while. It's not just a temporary policy.
Right. I mean, I think it's a little bit of both. I mean, it's become ubiquitous. He calls tariffs his favorite word in the dictionary. He clearly is a believer in them. Most importantly, top advisors that have his ear and are influential with him also are believers. So there's a little bit of a supportive, echo chamber effect there. So he clearly believes that tariffs are good long-term for balancing trade and for, as he's talked about, this external revenue service for raising trillions in revenue. So he sees them as a revenue raiser, which is an important way to, it's important to understand that as you look at what he's doing here. That said, he's clearly shown a willingness to withdraw threatened tariffs when he wins some concessions. We saw that with Colombia very early on in the acceptance of migrants back from the United States. And we've seen the on-again, off-again approach, partial off-again approach with U.S. Partners in North America, Canada, and Mexico, which is clearly about a tug of war and getting some policy goals achieved.
Well, help us look forward a little bit. We did hear today the president saying that reciprocal tariffs on Canada may be as early as today. What's to come, though? What's still to come when it comes to tariffs and what this president wants to lay out?
There's an awful lot on the horizon. And, it's so much so that I can tell you that officials, I think, are even keeping scorecards at this point. It's just a lot to remember, and it is changing. So right away, we are anticipating, we already know, actually, tariffs on aluminum and steel are set to go into effect next week. That's already been ordered by the president. There's obviously been a significant amount of lobbying around that, and last-minute changes on any of these. We've seen how that happens. So I guess stay tuned there. We also have tariffs coming, or threatened rather, on lumber and pharmaceuticals and semiconductors. So those are all in the ether. The president talks a lot about April 2nd as being a big day for tariffs. Mostly that is a focus date for him because he wants to do reciprocal tariffs. He's asked his trade representative to come up with at least a plan by April 2nd, if not actually an execution of these on that date. And this is really about balancing trade, really making sure that the U.S. is imposing tariffs that equal the tariffs that are imposed on our goods, or the U.S. goods rather, from other countries, and kind of the value or the cost rather of non-tariff barriers and regulations that hold back U.S. goods from being sold in their countries.
It's fascinating, Jen, and I've been thinking about this, and I'm just listening to you talk, that so much of this is President Trump. But, typically we would have a lot more, I feel like, from the U.S. Trade Representative and different members of administration weighing in more on this. His ability to be this point person on tariffs and to take actions quickly remind us about him having enacted the 1977, I should say, International Emergency Economic Powers Act. That gives him incredible authority, right, to do things.
Right. So the initial order setting tariffs of 10%, 25%, and 25% on China, Canada, and Mexico, respectively, that came to the brink of coming into effect last month for Canada and Mexico, did go into effect for China. Those were implemented under this emergency law. It's being used in a very unusual way here. It's never been used in this way for trade. There's an assertion essentially that fentanyl deaths, the trade of fentanyl into the United States, is causing untold deaths that are just a real security challenge and an emergency threat that needs to be dealt with in this way. So that is the emergency justification for that initial slate of tariffs.
But it also provides an off-ramp for tariffs against the two neighboring countries, the two neighboring trading partners to the United States.
Absolutely right. I mean, the president hinted at that yesterday. He's done it a few other times. And a top advisor, Howard Lutnick, Commerce Secretary Howard Lutnick said, hopefully by the next month, we'll have seen enough reductions in fentanyl and illegal immigration that we can just move to focus on reciprocal tariffs at that point. So clearly, there is a pathway to getting rid of those tariffs. But again, with the replacement then of the reciprocal tariffs Trump has threatened.
All right. Good to get an update on this. Hey, Jen, thank you so much. Bloomberg News senior reporter Jennifer Delowy joining us from Washington, D.C. And it's been tricky, for all of, the news teams kind of keeping track of it all and just trying to make sure it's accurate because there's a lot of headlines that continue to come.
Look, I think tricky for traders and investors as well. Look at just the market swings, the gyrations that we've seen today. The S&P 500 right now is higher by 0.4%. The NASDAQ composite up 0.5 percentage point, a far cry from what we saw this morning when we saw markets down.
No, it's a really good point. Hey, listen, straight ahead, everybody, the tech magnate and billionaire whose network is quietly shaping Trump's government. Do you know?
Is it Elon?
No.
Oh, it's not Elon. Somebody else we got to have in mind.
It is. It's also a most read story. We'll get to that in a moment.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we've got the billionaire very connected to Donald Trump, and nope, it ain't Elon Musk. It's another one who has actually been rather quiet, Tim.
He has. We're talking about none other than Peter Thiel. He's the billionaire tech entrepreneur who used his wealth to influence, I should say, in Silicon Valley to help Trump win the presidency, and who now has deep connections to the new administration's efforts to remake the government.
That's right. For a rundown of how intertwined Peter Thiel is in the Trump administration, with us is Bloomberg News cybersecurity reporter Jamie Tarabay, who joins us from our Washington, D.C. bureau. Jamie, good to have you here. Great story, among our most read. Remind everybody, though, about Peter Thiel's relationship to Donald Trump during his first administration and how it has continued in the second administration, because he keeps a pretty low profile right now.
That's right. I think Peter Thiel, who very famously co-founded PayPal with several other tech founders in Silicon Valley, surprised a lot of people in California when he threw his lot in with Donald Trump in 2016. He spoke at the Republican National Convention. He gave over $1 million to his campaign. And then he was very, very visibly part of the executive transition team. We saw him a lot in the hotels in Mar-a-Lago and at Trump Tower in New York, advising Donald Trump on who he should be bringing into his administration. He actually did have two people who were senior executives at Thiel Capital, one of his many firms and companies, go and work in the National Security Council and in the White House. So this isn't something that has just happened, but as you said, he was pretty quiet in the last couple of years. He had said that he wasn't going to really support any political candidate or make any donations, but he did, I will note, in 2022 support J.D. Vance's the Ohio seat, because J.D. Vance used to work at Mithril Capital, which is one of the venture capital funds that also Thiel co-founded.
Okay, so a lot of this stems back to the PayPal mafia and that group of individuals who many years ago was at PayPal in its early days. It includes people such as Elon Musk. It includes people such as Peter Thiel. It includes people such as David Sachs, the crypto and AI czar. Take us back to there and sort of how this all stemmed out from, a couple decades ago in Silicon Valley.
Well, as you said, David Sachs and also Ken Howry, along with Elon Musk and Peter Thiel, co-founded PayPal. They made a lot of money, but also politically speaking, and this is a really interesting point, Peter Thiel, when they first kind of launched it, wanted it to be a way that people could transact and send money to each other without, sort of federal oversight or government overreach. So it really, even back then, was sort of tipping his hand about his political views when it came to companies and business and I guess sort of civil rights in a way. Since then, and it's worth pointing out, not only is David Sachs one of the co-founders, President Trump's crypto and AI czar in this current administration. Ken Howry was originally in the first Trump administration was an ambassador, and this time around he's going to be the ambassador to Denmark. So all four men have been intricately, in Thiel's case, quietly involved, but we've been really kind of surprised, and one of the things that has really kind of intrigued us was, as you said, Elon Musk has been very visible, very vocal. Peter Thiel, not so much, and yet the ripple effect of the PayPal mafia, the Founders Fund, which is Peter Thiel's venture capital fund, we've just seen so many places and people that have come out of all of those areas and now are entering into administration roles. They're at the Defense Department, they're at Health of Human Services, they're in the White House. So it's really, really telling to us. What you've seen online is just the beginning. As we get more names, we're going to be adding more to our story.
And what's really interesting in all of this, right? It's not uncommon for associates of a president to bring in or have their allies maybe be, have some positions. A lot of times, big donors become ambassadors and so on and so forth. Having said that, what makes it interesting, right, is the companies that are backed by Peter Thiel depend on a lot of government contracts in some instances. And so it's that connection, correct?
Absolutely. We've seen, and we mentioned this in our reporting, that since Donald Trump was elected, Palantir, a company that Peter Thiel co-founded, its stock soared more than 90%. Anduril, a defense tech startup that Thiel has also backed with his founders fund, landed an expanded role with the U.S. Army, and it was valued at more than $20 billion. Scale AI, another founders fund portfolio company, just recently announced a multi-million-dollar deal with the Defense Department. So, yeah, you know, it's just like, it sort of begs a lot of different questions right now, but you can see a clear line from a lot of these former employees in areas that are instrumental to the growth and success of companies that Peter Thiel and Elon Musk are connected to, particularly over their competitors.
Which is why some say we want to make sure we have a lot of transparency in all of this in terms of who's in the government. I should point out, just looking at Palantir, about $1.6 billion in revenue in 2024 was in the government sector, and the remaining 1.3 was commercial. So you can see the exposure that they have in terms of government. Jamie Tarabee, thank you so much. Cybersecurity reporter at Bloomberg News out there in our DC bureau. For those who are watching on TV, the Clone Moves is coming your way in just a moment. We're going to continue.
Oh, yeah. Stacey Maria Ishmael coming up next on Business Week.
A letter to Iran's supreme leader. Asked about it by reporters, he was vague.
And that's going to be the next thing you'll be talking about is Iran. What's going to happen with Iran? And there'll be some interesting days ahead. That's all I can tell you.
CBS's Nancy Cordes.
He was the one that blew up the Iran nuclear deal during his first term. But the reason that he is reaching out now most likely is because the Israelis, our close allies, are very concerned that the Iranians are getting extremely close to having an operational nuclear weapon. And so that may be why President Trump is stepping in now, saying he wants to talk.
The president threatened Russia with sanctions today, but then said he was finding it more difficult to deal with Ukraine. National Security Advisor Mike Waltz says the talks next week are still on.
Secretary Rubio, myself, and the Ukrainian delegation will be meeting in Saudi Arabia next week to get these talks back on track, get a ceasefire in place, and drive peace home.
The Trump administration has canceled $400 million in grants and contracts to Columbia University. Michael Wallace reports.
The administration cites what it calls the school's continued inaction in the face of persistent harassment of Jewish students. There have been more anti-Israel protests there this week. The administration's task force to combat anti-Semitism is reviewing all $5 billion of Columbia's federal funding and warns more cancellations are expected. A university spokesperson says the school is committed to combating anti-Semitism. Michael Wallace, CBS News.
A new study from the University of Colorado Boulder finds 1 in 15 U.S. adults have been present at a mass shooting. Study author David Pyrus.
We were surprised by it, both in terms of the proportion of the U.S. adult population who had been on the scene of a mass shooting in their lifetime, as well as those who indicated they had been injured in a mass shooting.
Texas health officials say the number of measles cases is growing. Omar Villafranca reports.
The state is now at 198 confirmed cases, a majority of them, 137 in far west Texas.
U.S. employers added 151,000 jobs last month, but the jobless numbers are cloudy because of all the Fed layoffs and the tariffs. CBS's Jill Schlesinger.
10,000 in this report. There'll be more in the next couple of reports. But what we don't know is whether the private sector has enough confidence in economic growth to justify bringing on more workers.
On Wall Street, the Dow is up for a change, higher by 151 points. This is CBS News. A country music star is pouring her heart out after the death of her true love. CBS's Deborah Rodriguez has the story.
Dolly Parton's released a new song dedicated to her husband, Carl Dean, who died